Volcker had to fix 10 years later. Respond to that. What is the fear that we have about the time of Walter Heller in the 60s that we should not fear today?
Yeah, well, I would say to the right, in the 1960s, you would have not been calm about COVID, right? That was a pandemic, and that is the root of all evil up to this point. Putin is like going for the leaderboard here, but that is why we have high inflation, because we told lies to the American people and we let 1 million Americans die. So, you know, like, we're fighting for the people here. This is not the 1960s. This is not the 1970s. I am not being optimistic. I'm a macroeconomist, for God. Like, I'm not optimistic, but I do believe that we are pointed in the right direction. And I do believe we might actually rally together from red to blue and, you know, fight back. I really, like, I can't give up hope here.
Claudia, that line, though, just repeat that again. We have inflation because we lied to Americans and let 1 million people die. What were the Europeans doing?
We were gripped by a pandemic. There is absolutely higher inflation in the United States than in Europe. And frankly, Europe has a lot more price control. Like, there's more going on under the hood in terms of price pressures in Europe. But again, the United States created the vaccine. We could have vaccinated our country and we could have vaccinated the world, right? Europeans did not have that lever and we didn't pull it. You know, but it's water under the bridge, right? Like, we have to keep moving forward. We have to be prepared for the next wave. Like, we got to stop preparing for the best and hoping for the best, right? So I think, but these are lessons that I think people are coming around to. And now that we have an actual war happening, I think we're going to get serious. I hope. We're seeing those signs, right? So that's good. And we have to embrace the good here because there ain't a lot of it.
Claudia Sam of the Jane Family Institute, thank you. Tom, one perspective on the situation over the last couple of years.
It is, and we heard this from Lawrence Summers a couple days ago. Joe Stiglitz was on as well. I mean, there is a view on the left to everybody calm down on inflation and we'll solve it. And the key foundation, John, is with productivity and with American technology and growth, we can work our way out of this inflation. There's another school of thought that says, we're not so sure about that.
Well, I mean, with all due respect, Tom, that's not just a view on the left. I mean, that's somewhere off the charts in the last couple of minutes, Lisa.
Look, just putting the politics aside, what we're seeing in interview after interview is that people do not agree on exactly what the inputs and the reasons for the inflation that we're seeing, but we know it is being turbocharged by the commodity price action. And that is what we can say, putting politics completely to the back burner.
The S&P up 1/3 from New York City this morning. Good morning. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. U.S. drivers are now paying more for gasoline than ever before, according to the Auto Club AAA. Average pump prices are now $4.17 a gallon. In California, that's the most expensive state for drivers. Gas averages $5.44 a gallon. Demand has been surging, and the war in Ukraine has threatened global oil supplies. Russia is threatening to cut off natural gas supplies to Europe. That's part of Moscow's response to sanctions imposed over the invasion of Ukraine. It's a move that could heighten the turmoil in the energy markets and drive those consumer prices even higher. And the European Union will unveil a plan for a massive bond sale to finance energy and defense spending. Bloomberg's learned the proposal may be presented this week. The EU is coping with the fallout from Russia's invasion of Ukraine. No word yet on how much money would be raised. Australia's Qantas Airways says it is well placed to recover the cost of fuel if it stays where it is for now. Bloomberg spoke with the airline's chief financial officer.
If we see fuel prices continue to stay as high as they are heading into the end of this year, the way in which Qantas has historically managed higher fuel prices is to recover that through higher fares.
Hudson says demand for air travel at Qantas is strong enough to tolerate ticket price hikes. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The first step in building a connectome is to get your hands on some brains and then cut them up. It all sounds very grim, but Harvard turns out to be quite efficient with its brain harvesting. Jeff's lab can do a year's worth of research with a single mouse brain. Small chunks of the brain are fed into the slicer, where a diamond blade carves off a thin sliver of tissue. The tissue floats along some liquid and onto a piece of tape. The brain slices are then put into this very large machine, where they're photographed in the finest of detail. Software helps stitch the pictures back together into a single 3D image, and algorithms are applied to help make sense of what's going on inside of the brain.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Seems like they're headed towards banning the Russian oil.
My sense is there's such strong bipartisan support here, and then what we've heard from the White House is they're considering.
An obvious thing to do is the oil, but again, the broader thing would be, why should any Russian products get special treatment here in the United States?
Senators Rubio, Kaine and Portman from New York. Good morning. Futures up a third of 1% on the S&P, up 14 on the Nasdaq, up a tenth of 1%. Looking at doing something about Russian crude, banning Russian energy. That's the conversation in Congress at the moment. For the bond market, yields are higher by 6 basis points. For the commodity market, 122. Crude's pushing in that direction. 127 almost on Brent, and Shell backing away from Russian energy. Your headline of the last hour, Tom, an apology from the Shell CEO.
Yeah, absolutely. No question about that, John. But I would point out where we are now, 6:48 Wall Street time. Our reset this morning is a VIX of 35. Yesterday, it was 31, 32. So I would suggest the tape is as fragile as yesterday. It's just a different news flow.
Think about how wide the range of outcomes are at the moment, Tom. I mean, you could be equally disrupted by a de-escalation than you would be an escalation. That's why it's so difficult in the oil market for equities and for elsewhere too.
Well, let's move on here. What we're going to do here is do something we really haven't talked that much about, which are the refugees. I believe the number was 600,000 and then 1 million. And then I believe I see numbers now in excess of 2 million. This is something Julie Norman has studied for years. She's co-director of the University College of London Center on U.S. Politics and joins us this morning. Julie, I've got to go deep into your CV and into your archive on refugees. What's the number one thing we get wrong about refugees?
Well, Tom, there's many things I think we get wrong, but first and foremost is just why people are fleeing and where they're fleeing from. This is a very different kind of refugee flow than we've seen in the past. It's much faster than we've seen in the past. And what I think is unclear for a lot of people is just what the long-term implications of it are. We know people are coming over the borders now, need immediate relief, but they also need long-term services and assistance as well. That's something that both the U.S. and the UK, as well as the EU, I think need to step up a bit. The EU has been first and foremost in trying to get temporary status and getting visas. The UK and the US have been much slower in that regard. And those kinds of long-term aid is more of what we're going to need for this type of movement of people.
It seems so much larger than the Hungarian Revolution of the 50s, and of course the immediacy of media as well. Which institution do you look to provide leadership here? Or is a refugee done nation to nation?
Well, different nations do have their own refugee policy, which is one reason why it's why it's difficult to have a coordinated response. Obviously, organizations like the UNHCR can provide kind of umbrella support when there's actually refugee camps and whatnot. But again, those more longer term challenges of actually providing some sense of stability and long-term security for refugees is very state specific. Again, the EU as a bloc has had a different kind of mechanism than the US and the UK. And so for many, just getting to the EU opens up different kinds of opportunities, whereas the UK right now, for example, has a different immigration policy that has so far somewhat limited the ability of Ukrainians to be able to seek refuge here. We're here that the Home Office is trying to work on that, but it's been much slower than the EU.
Julie, in the here and now of this conflict and trying to end it as quickly as possible, what did you make of what a lot of people have viewed as a softening in Vladimir Putin's stance as far as his demands go for ending the crisis? Namely, he did not call for a regime change and for the current administration to be eliminated from office.
Well, Lisa, I think we've heard very consistent messaging from Putin in terms of his demands regarding NATO. And so this was before the invasion and up till now. One of his core demands is, again, that there's a pledge from Ukraine to not join NATO at any time in the future. He's also calling for Ukraine to be neutral or to demilitarize, and also to recognize the annexation of Crimea and the Donbas region. So working within that framework rather than regime change is something that, again, will be up to Ukraine if they're willing to negotiate on any of those points. But that does bring it back to a more tangible negotiating level than talking about a state change, and also very importantly, contains the negotiations to what's going on in Ukraine and not to something broader regarding other NATO states or other states in the region.
Julie, in that perspective, can you lump in how we should read this assertion from Russian officials yesterday that they were thinking of cutting off gas to Europe, potentially closing Nord Stream 1 to Germany at a time when you already are seeing prices soar to new records every day?
Sure. Well, this is obviously in response to what we're seeing now with discussion mostly in the US, but somewhat in Europe too, about expanding the sanctions to the energy sector. We obviously heard some movement on that on Capitol Hill yesterday. The White House still has not firmly decided. And one of the reasons they haven't is because there is pushback in Europe to those moves. So as those discussions are happening, Putin is trying to have his own deterrence, if you will, by essentially threatening to cut off Russian gas and oil, which, as we know, provides about a third of the resources to Europe. So I think this is something that is more of where the focus is going to be in these next few days about how the international community kind of engages with this, and big implications for Europe as well as the US on that.
Julie, wonderful to hear from you as always. The brilliant Julie Norman there of UCL. Just getting a little bit of an update on a story that's dominated the headlines in commodity circles over the last 24 hours. Bloomberg really leading the way on this one. So this Chinese tycoon who built this massive short position in nickel controls one of the world's largest nickel producers. He is known as Big Shot in commodity circles. Here's the story. He's now facing billions of dollars in mark-to-market losses after the metal surged more than 170% in 2 days. This according to people familiar with the matter. You will be familiar with the story of one of his brokers, the International Unit of China Construction Bank, CCBI, Tom. who has now paid outstanding margin calls relating to nickel
Yeah.
positions on the LME, that according to a person familiar with the matter as well. But this story, Tom, just slowly unraveling itself in the past few hours.
The fundamentals on this, John, are simple, and I'm using David Fickling here in his brilliant essay. There's two kinds of nickel mining. There's the fancy stuff, which Russia's dominant in. They have 1/3 of the nickel sulfide, I believe it is. I don't want to do inorganic chemistry here, but Russia's in the fancy stuff. This guy is in the less fancy stuff, which is taking nickel, extracting it out of clay in Southeast Asia. It's a completely different world from Russia, and he was hedging off his belief and his bet on what electric vehicles would do because they use that nickel in their processes.
Lisa, when things move quickly, things break. And overnight, things broke on the LME in the nickel market through 100K a ton briefly, and then trading suspended.
And Bloomberg is reporting that a lot of commodity trading houses are preparing for more things to break by trying to get some sort of credit line going and boosting credit lines that they already have. I keep going back, John, to what you were talking about yesterday, how we saw all of these wagers in the financial markets kind of starting to transfer over to commodities, and it is a very different market when there is a physical good that needs to get delivered.
That's the Goldman story. Just don't have the size there either, compared to, say, the global equity market, the global fixed income market. That subtle shift into somewhere smaller, big things happen. Futures up 0.5%. From New York, this is Bloomberg.
It's almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
is a full exacerbation of those inflationary pressures over the last couple of weeks.
We have to keep an eye on the resiliency of the consumer in here and whether or not that holds up.
We don't actually have a lot of visibility on how things play out.
We were in a commodity squeeze already before all this happened, which is why it's so dramatic.
Ultimately, you will see higher rates, and it will be as a result of the higher inflation pressures.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures up 0.6% on the S&P. TK in the commodity market, monster moves again.
Yeah, I don't buy the stock market bounce. I mean, there it is after the difficult day yesterday. In the commodity markets, there it is, nickel. John, you've mentioned it all through the morning, but there's much else as well. I would note gold. I think it's been underreported, John. Gold is the ultimate war commodity. Hit $2,027 about 2 a.m. this morning.
The story of this morning so far, Shell pulling back from Russian crude, apologizing for buying it last week, and China perhaps stepping in, Tom. China mulling buying stakes in Russian energy and commodity firms. Well, where the West goes, does the China step in?
Exactly. There's a vacuum there, and somebody's going to step in. I think everyone understands that, and clearly the leader here is China, with a relationship with Moscow that goes back, a contentious relationship that goes back for decades, John. No surprise there, but the West is going to do what the West is going to do, and maybe we'll hear from President Biden today on that.
And that's what's difficult for the administration, Lisa, putting together the latest sanctions. If they ban the import of Russian energy to the Chinese, does the Chinese government step in?
Well, what do you do instead? And I think that that's what really speaks to this EU agreement or arrangement that we're hearing, that we're likely to get more details about, borrowing a lot of money to spend on different types of energy, on securing other methods in order to necessarily bolster themselves without having to rely on gas and oil in the same kind of way. At what point are you going to hurt yourself for some long-term gain? And can you do that unless you pledge big money behind it?
Struggling to understand the policy response at the moment, aren't we? The story out this morning from our team in Europe at Bloomberg suggesting the EU might be putting together a fund again to help with defense, to help with energy as well. We don't have size, Lisa. We don't have details. The symbolism is there, though.
The symbolism is there, and I go back to German's Chancellor Olaf Scholz coming out and saying that they would meet from now on that 2% military spending that is the NATO's budget goal. And Jeffries put out this study that I thought was fascinating, saying that if non-U.S. members of NATO increase their defense budgets to 2% as required, that would mean that they would have to increase the defense budgets by 25%.
We'll get into the bond market in just a moment. Futures this morning, good morning, up 0.5% on the S&P. On the NASDAQ right now, up 0.25%. Yields higher in the US by 7 basis points at 184. Spreads are tighter. Italy versus Germany over in Europe off the back of that European debt story. In the FX market, euro-dollar reclaims 109. 109 on euro-dollar. That currency pair, Lisa, positive by 0.5%.
I'm actually watching the euro for a possible gain. And the reason why is because if this fiscal spending does come into play, if you do get that support, how much does that bolster a case that frankly has almost been left for dead over the past 2 weeks with people talking about stagflation in the euro region? All right, today what I'm watching is day 2 of CERAWeek's first in-person conference in Houston. This is all the energy and commodity leaders coming together to talk about what to do in such a violently price-swinging moment. We are going to be speaking with Ryan Lance of ConocoPhillips, William Company's CEO Alan Armstrong, as well as Michael Smith of Freeport LNG on Bloomberg Television. Yesterday, a lot of these commodities executives came out and talked about the need for more support from this administration. We've been talking extensively about the dissonance between a delegation from the U.S. going to Saudi Arabia before talking with domestic oil and gas producers. And this comes, of course, as oil prices surge to the highest levels going back to 2008. Today, Secretary of State Antony Blinken has been in Estonia. He's going to France to meet with French President Emmanuel Macron to talk possibly about how to shore up support for the gas and oil supplies to Europe, as well as the alliance and the military budget and outfitting some more NATO troops in some of these Eastern European nations. And later today, the U.S. Treasury Department is selling $48 billion of 3-year notes. John, how much do we see people pulling back on rate hike expectations? Honestly, I am actually surprised to see that we are still looking at 6 rate hikes baked into expectations. If you look at some of the rates traders, I find this interesting at a time when you've got inflation as a serious concern, and at the same time, they will be hiking into a slowing economy.
And Bank of America holding on to 7.
Yeah.
Goldman 2. I haven't seen the big banks change their calls. In fact, Lisa, I've been surprised I haven't seen the downgrades to U.S. growth either.
People are waiting to see, and frankly, I wonder how much Margie Patel represents a significant belief here that we're going to see a short-lived conflict. However, John, even if it's short-lived, are these disruptions to some of the commodities markets short-lived? And just the moves, the violence themselves have a significant impact.
Lisa, thank you. Team coverage starts right now. Bloomberg's Joe Matthew in D.C., Maria Tadeo in Brussels. Joe, let's talk about the sanctions effort. The White House has led that effort over the last couple of weeks. It feels like Congress is starting to take over just a bit on the energy front.
After showing up late to the party here, Jonathan, I mean, this could have been done weeks ago and in advance of an invasion. In fact, they were close to striking an agreement on such a thing, maybe not with a ban on Russian oil, but the rest of the sanctions that we've had to see the administration go on its own here. Indeed, there is a framework. The leaders on the 2 Ways and Means committees, House and Senate, would ban the oil, would try to kick Russia out of the WTO, and would give the president some powers to add tariffs, not just to Russian, but to goods from Belarus coming into the country as well. The question is, will the president beat them to it? And this is a real question right now. He could do this morning through executive order. And I know that there are some concerns with our European allies, but there are also concerns about the price of gas here. This is very real for this president, who has been beaten by Republicans for months on the issue of inflation and, of course, energy policy. $4.17 a gallon, the highest we have seen. That eclipses the high of 2008, according to AAA. I talked to an analyst from Gas Buddy last night who said, if, in fact, Russian oil is banned from the U.S., you can look for unleaded gasoline at $5 a gallon. And we all know that if you drive around and look at the gas pumps with the "I did this" stickers with a picture of Joe Biden pointing to the price tag, there are political implications no matter what decision he makes.
Maria Tadeo, I think we forget the relative wealth here. The U.S. per capita, over 60,000 per capita GDP. Germany, very wealthy at $45,000 per capita GDP. Russia barely gets by at 10,000, and if their oil industry is blown up, what do they have left? Isn't Europe rich enough to get this done, to do domestic financing, and to withstand an energy onslaught?
Well, Tom, we're about to find out. That is where the European Union says their focus now is to deal with the fallout from this crisis, and they say they could well be. And by the end of the week, I'm pretty sure we're going to have something that looks like a new fiscal package that would focus on dealing with the repercussions on the energy, but also on defense spending. It is interesting to me, Tom, that I had a contact who told me it's Vladimir Putin that we're going to have to thank for the biggest spending package and the completion of the fiscal union of the euro area. So in reality, it does seem that Europe could weather this, but Tom, for them, this is not about this winter or the next 2 months. It really is about a huge shift in the way that the structure of energy and energy policy works in Europe. We're talking about really breaking away from the past and really changing structures that do not just focus on the now, but in terms of how do we heat up our homes from next winter on.
Are we seeing a massive shift, Maria, from the Angela Merkel era, where we had basically this rejiggering and this sort of reconfirmation of austerity, to the Olaf Scholz era, where he's really talking about borrowing more money. He's talking about increasing defense spending. He's taking a much more aggressive and frankly different approach.
Yeah, completely. And of course, a lot of this has to do with Olaf Scholz, and they have changed the game, and the Germans really sound very different. I would point to the words of Christian Lindner, who's the finance minister, who said, to me, security is money well spent, and security is democracy. So that is a big change in tune. And I guess we also have to wait until the April election, when Emmanuel Macron is very likely going to be re-elected for a second term. This is an election that could be monumental for Europe if you have Berlin and Paris who suddenly say we need to spend more. And here's the thing, actually, to understand Brussels, what you need to know is that nothing gets done here if the French and the Germans do not agree with it behind the scenes. So if you do get two presidents who say that they are in for more spending, pro-European Union, well, you could argue for Brussels is going to be much easier to really pay out, but also tap markets in much bigger ways.
And the big things often happen when there's a crisis. Maria Tadeo in Brussels.
In Europe, for sure.
Joe Matthew in D.C. Maria, thank you, as always. That poll we mentioned in the last hour, let's do it again from Quinnipiac. Tom, Americans say 71 to 22% they would support a ban on Russian crude, even if it meant higher gasoline prices.
For our international audience, it is so rare to hear that 70 number in polling. John, most polling is in the 50s, this way, that way, maybe up into the 60s, but to see a 70% statistic is stunning. I don't care what the margin of error is and all that. It's a huge, huge outcome.
They're pretty united on that. Another move in Europe we need to talk about, Lisa. German 10-year yields up 10 basis points. Italian 10-year yields down a basis point. And that spread is flatter, tighter, and that spread's tighter because of this symbolic effort that we're talking about, writing about, reporting on. The Europeans might make another move here.
What's the consequence of Germany abandoning its austerity pledges? What is the consequence of them starting to spend in a real way and borrow money, expand their debt pool? How much does this actually help the periphery, and how much does this change the view of Germany? You know, I struggle with this because at some point in markets, people are looking at this as a positive, right, as growth. And yet, how much do the debt markets get punished in Germany that have relied on this austerity?
Well, how much does energy shave off growth this year?
Yeah.
In Europe? Can you be constructive on the European economy here? It's pretty difficult. It's hard to be.
Well, that's the reason why you've seen such a huge underperformance of all European assets. And I know you've been hitting hard and rightly so on the European banking story, and perhaps that will be the canary in the coal mine. When that turns, perhaps you can start getting a little bit more optimistic.
The European banks this morning, slightly positive. Good morning to you. Futures up 0.7% on the S&P. On the Nasdaq, we're up 0.5%. Crude bouncing back, up 2.9%, 122.83. The conversation ongoing, an active conversation, according to Secretary Blinken, on banning Russian energy. Shell's already doing it, already apologizing for it, for buying it last week. Who else follows? They're late. Lisa, everyone else is piling in already.
Yeah, I know, and it's political pressure that's becoming a reality for everyone but the Chinese. Honestly, that story we need to talk about more.
For sure. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Rishika Gupta. In Congress, key lawmakers have announced the outline of a bipartisan bill to bar imports of Russian oil into the U.S. The House could vote on the proposal as soon as Wednesday. Russian oil makes up about 3% of U.S. crude imports. American refiners have been lobbying to make sure any new import controls do not apply to deliveries that are already in the works. Meanwhile, Shell will phase out all purchases of Russian oil and natural gas. Shell also will shut its service stations, aviation fuels, and lubricants operations in Russia. CEO Ben Van Beurden said the decision last week to buy a cargo of Russian crude was not the right one. And Bloomberg's learned that China is considering buying or increasing stakes in Russian energy and commodities companies, amongst them Gazprom and Rusal. Beijing is in talks with its state-owned firms about any opportunities for potential investments in Russian companies or assets. And the London Metal Exchange halted trading in its nickel market after an unprecedented price spike. Nickel rose by as much as 250% over the past 2 days alone to hit record highs above $100,000 a ton. That left brokers struggling to pay those margin calls against some deeply unprofitable short positions. And Google has agreed to acquire cybersecurity company Mandiant for $5.4 billion in cash. It's the company's second biggest deal ever, and it will give Google more tools to protect its cloud clients by responding quickly to online threats. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
what's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Big things are happening on Bloomberg in March. First, Bloomberg Triple Take, breaking down the day's biggest stories.
Today's Triple Take focused on the energy transition.
Then, the return of Bloomberg ETF IQ.
The last major holdouts of the ETF revolution.
And the debut of Bloomberg Crypto.
The CEO of Binance weighed in.
Finally, David Rubenstein brings you insights and advice from the world's greatest investors on a new season of Bloomberg Wealth. All this March, right here on Bloomberg.
With regard to a potential oil embargo, an embargo on the importation of Russian oil, this is something, as I mentioned, that we have been discussing within the administration. The president discussed this as well yesterday when he had a call with the French president, British prime minister, and the German chancellor, and something we're very much actively looking at.
It is something they're actively looking at. Secretary Blinken there. Will the Europeans join? The Germans yesterday saying emphatically, no. The Congress effort is building. They're heading in that direction. Shell is already heading in that direction. Consumers, they're already supporting heading in that direction. The question I would have, Tom, going into any of this would be, is the market already there yet or not? Well, are we priced for it at 126?
Okay, the 126 is the key point, John, is that there is a bid to oil. I mean, I know there's an ebb and a flow today, and equities are bouncing off the horrific day yesterday. But to review, John, I got a 127 rounded up on Brent crude and 122 on West Texas Intermediate. We're already at painful oil prices.
Close to 140 on Sunday evening, Tom, when we opened up the market for this week. And let's be clear about it. We've gone through it step by step. The energy producers have been shamed into stepping away from Russian crude. They feel like they have a moral obligation now to step back. They're apologizing for it. Even if you want to deal with Russian crude right now, Tom, the ships, the tankers can't get the insurance to go and pick it up. It's been a big, big problem over the last few days.
Well, it's a commodity inflation. And again, what is it, John? I'm sorry. Is it tomorrow or Thursday we get the inflation
CPI
report?
Thursday.
There's going to be that number. It's going to be 8%, John. But what's changed here in a war is this new duration of inflation and the great uncertainty about that. And to me, it's tangible.
And a week ago,
no other way to put it.
Let's call it a month ago, we knew what the Fed would do, right? We had a decent idea on how they'd respond to it.
Well, yeah.
Do we now?
Any central bank, what's the Bank of England going to do? Just as an example, John, I looked at electricity rates, and as an American, John, at some point in the show, we got to figure out when you can explain to us electric bills in continental Europe and Great Britain, because it's a little bit different than in America. Let's move on here right now. Victoria Fernandez joins us, Chief Market Strategist at Crossmark, just to get the lay of the land to try to figure out what to do. Victoria, what have you not done in the last 13 days?
Well, actually, Tom, we've been doing what we had been doing in the 13 days before that. We've been in the market. We've been trimming names that have been higher. We've been going in and buying names that have taken a hit and have come back, and they've been on our shopping list. And whether that's going to be value names, it's a few tech names. We've been in the market trying to be opportunistic and trade some of these names that are there in order to build our portfolio. Obviously, our outlook is a little more cautious than where we were before, so we could be a little more choosy on the names that we have, but we still think there's some buying opportunities here.
Have you focused more on America? Because we were not making a joke about it, but the reality is in waves we go buy international, buy EM, buy this, buy that, and yet it seems over the recent years we all come back to Mother America and the big caps of America. Is that what we're going to do here in the next year?
I think you're going to see that, Tom, and it's interesting because, as you know, Bob Dahl, our CIO, one of his predictions at the beginning of this year was that we might see international stocks finally outperform U.S. domestic stocks. And now we have to look at that and say, because of where we stand with the Russia-Ukraine issue, are we going to see that happen? And now I'm not so sure. There's been a big shift in that European economic recovery, and we have to wonder, is that going to be long-lasting? You talked about duration of inflation. The duration of this incursion is really going to weigh on the economics of both Europe and the U.S., and that could shift where people are investing. Right now, we're focusing more at the U.S.
Victoria, we were talking earlier with Margie Patel, and she was talking about her optimism that this conflict would resolve itself relatively quickly and that there will be buying opportunities. I do wonder, though, what the longer-term ramifications are for the volatility that we're seeing in the commodity space, the incredible surge in oil prices, and frankly, the lack of dependability in basic staples like wheat and corn.
Yeah, I mean, look, Lisa, when we talk about the duration of this, the longer it goes on, obviously, the larger the ramifications are, and that's going to be to investor sentiment. I mean, you look at consumer confidence numbers over the last week, the daily numbers, surprisingly, they've moved a little bit higher. Normally, they're highly correlated with gas prices, so it's a little surprising. But the longer this goes on, it's going to hit investor sentiment. It's obviously going to hit inflation for the longer term instead of maybe the spike that we were expecting. It's going to affect currencies. I mean, we saw how the Euro-Swissy went under parity this week, so you're going to affect the currencies. And then obviously we're talking about that European economic recovery as COVID retreated. That's going to be affected as well. So there are longer lasting effects the longer this goes on. The question is, does China step in and pick up enough of the slack from what the West and Europe is not going to do with Russia to kind of buffer the situation a little bit and allow Putin to continue?
Victoria, thank you. As always, Victoria Fernandez there of Crossmark Global Investments. Just trying to work out the cross currents of government policy, the central bank response to all of this. And Tom, at the moment, I think it's fair to say it's almost impossible to.
Yeah. No, the uncertainty's there. And, you know, John, I mentioned this the other day. There's risk where you got a measurement. There's uncertainty where you really don't have a measurement, and that's clearly where we are. What I would suggest, John, is Mr. Putin has gone radio silent, essentially. And within the mix that we see on the Bloomberg, in the mix of the politics, including the Secretary of State just speaking at the embassy in Estonia, John, it's real simple. Everybody's hanging on what the response is of the Russians to the quagmire their military's in.
So what you mentioned, Tom, is so important because we're focused almost exclusively on how the West will respond with sanctions, not the reaction from the Russians. Lisa, you mentioned earlier this morning, we have heard from the Russians. We heard from the Deputy Prime Minister, Alexander Novak, yesterday evening in a televised conversation, a televised speech late on Monday. He had some things to say. It was a very subtle threat.
Basically of just simply cutting off the gas supply to Germany and frankly to all of Europe, saying, look, we can close this. Two can play at this game. If you're going to start sanctioning all of us, we can sanction you. We can just simply eliminate your source of gas. I mean, a lot of people are sort of dismissing that because that would be more catastrophic potentially for Russia than for Europe. But I do wonder, and this is the reason why I'm watching that China story so closely, about the potential for them to make investments in Russian energy companies during this period. So perhaps the U.S. ones, the U.S. U.S. and the European commodity companies are fleeing, China sees a deal.
So there's an economic question here and a moral question. The economic question, I think, something the administration is considering, and they're right to. Are we trying to hurt the Russians without hurting ourselves? And if we ban the import of Russian energy and someone else carries on buying it, are we hurting ourselves without actually hurting the Russian economy? Then there's the moral question. And I think the moral question has become a much, much bigger one, Tom, in the last couple of weeks. Do we have a moral obligation to step back from Russian energy, even if other people carry on buying it?
I think the answer's been had, John.
Congress is there.
As anybody there.
Congress
is there, and
corporations are there.
John, I would suggest the president is waiting on Secretary Blinken to have good conversations with our allies on Europe. That's the way this works.
I would suggest they've got to work out whether they are prepared to move without Europe, based on our reporting through the weekend. That's the issue. Futures up 0.8% on the S&P. This is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Live from New York City for our audience worldwide, with futures up 0.5% on the S&P and the Nasdaq up 0.33%. A mess on the London Metal Exchange. For nickel through 100,000 a ton early today, then suspending trading. And just trying to explain this one piece by piece, Tom. Try and get through it with me. There is a Chinese tycoon who built a massive short position in nickel futures. That individual now faces billions of dollars in mark-to-market losses. There was a margin call of the LME for one of his brokers. This is an international unit of China construction bank, CCBI Global Markets. We understand that outstanding margin call relating to that nickel position on the LME has now been paid,
right,
according to a person familiar with the matter. But based on our reporting, Tom, we're talking about billions of dollars in mark-to-market losses.
And the tension here, John, going the other way, the gentleman clearly has a huge loss here, hedging this for whatever reason. But John, the tension here is there other people that were long at the time, whether short or long-term investment speculation, whatever, and you wonder, were they precluded from closing out their profitable long positions as nickel surged?
Ton to get through here. Javier Blas of Bloomberg Opinion joins us right now. Javier, let's just start with this. You said yesterday something's going to break. Did it just break?
Certainly the London Metal Exchange nickel market completely broke. The fact is that trading is suspended today. We don't know when it's going to restart. I doubted that they are going to be able to restart trading tomorrow. A significant broker missed a margin call that we understand that now has been paid, but still unexplained to me why a broker was allowed several hours, more than almost overnight, to pay an outstanding margin call. In other circumstances, that position would have been declared in default immediately. So a lot of explanation, and also a bit of a cloud over the London Metal Exchange. This is not the first time that this market suffers a trouble. Indeed, every few years, every decade, something breaks at the London Metal Exchange. Regulation and the exchange itself will really need to look at this a lot more closely than until now.
All right, so what are people saying that the London Metals Exchange should be doing to shore up their credibility to prevent this, and what's the long-term ramification for the exchange?
Well, the long-term ramification from the exchange is that you are a user of the exchange. You are not sure today of what is the price of nickel. You cannot get in and out of your positions. As Tom was saying earlier, people who have profits cannot really close their positions and take their profits. And some people that were short, mostly because they were hedging inventory. If you are long the physical product, if you own a physical nickel, you are short on the exchange used to hedge your position. They are facing monumental margin calls right now. Nothing to do with the current situation, but there are passengers there that they are going to be hard. Why this position was allowed to stay so long, become so big, and then why the margin call was not handled, I think, more properly, are the questions that we need to get an answer now.
Javier, Brent, let's call it 90 to 127. Can we see margin calls there? Maybe not of the drama in nickel, but nevertheless painful.
We are already beginning to see margin calls in energy. Most of the margin calls, the big margin calls, are coming on the electricity market. That I'm very sympathetic with you, Tom. Sometimes I don't understand my utility bill here either. But we have seen 1,000% increase on the price of electricity on the wholesale market in Europe. Big increases in gas. That's where the margin calls are coming. But we are going to begin to see also margin calls, big margin calls in the Brent market. A sense of what is coming. Trafigura, one of the world's largest commodity traders, this morning disclosed that he has increased his credit lines more than $1 billion, and he indicated that it was as the result of the troubles in Ukraine and the margin calls that all the traders are receiving. Margin calls of $1 billion is a big deal for these companies.
Javier, just to wrap things up, just on the LME, what are you looking for into tomorrow? How do they reopen this market?
Well, that's a big question. I think that tomorrow most likely will stay closed. I think that the first question is, do they cancel all the trades that happened overnight? Yesterday I wrote, when we were up 90%, that the market was not orderly. Why the LME allowed the market to continue trading overnight when it was clearly not orderly, and we moved from more than $50,000 to $100,000 a ton. I think that a lot of those trades are going to have to be washed out, canceled. So the exchange is going to have to spend the next few hours trying to figure out what stands and what needs to be cancelled.
Javier Blas, Thank you, sir. As always, Tom, the decision to suspend trading or close a market, your next decision is to reopen it. Sometimes that's not straightforward.
Well,
and as far as Russian trading is concerned, as you know, we still have no trading in Russia.
I looked under the WEI function, and there were no blinking lights under Russia as well. That's a different case as well.
No, of course.
For the LME, John, you know, you really wonder, and I think I make jokes about it, but folks, I don't know anything here. John Farrow's on the edge of expert on this. And John, I really wonder if there will be permanent damage to LME off of this.
Well, I'm no expert, Tom, but I have been to the LME rink. That's it. That's about as close as I've come to the action at the London Metal Exchange. The old ring, anyway.
Well,
good time. It's a beautiful place. Do you remember the old place?
No, I don't.
You should go check it out sometime. I don't know if you can you visit.
Closest I've got is Mining Week or whatever it's called in London.
LME Week.
And LME Week.
Okay.
Yes, I've been to LME Week.
Should we talk about crude? 122. Active conversation about banning Russian energy, Tom. The Congress is there. Seemingly, they're pushing in that direction. Bipartisan support. We've seen from one poll, if that's anything to go by, I don't know, by one poll suggesting there is public support for that effort. Basically, we've got massive corporations like Shell shaming themselves into the decision, Tom. They're apologizing for buying Russian crude. All that's left is for the US, the administration, just to say, okay,
well,
that's what we're doing.
For those waking up in America, you can look at Coca-Cola, McDonald's. Maybe we'll see something from them more definitive today with their very large operations across Russia. Right now, to be definitive, we look at the fixed income market and do that with Kathy Jones, Chief Fixed Income Strategist at Charles Schwab. Kathy, how have you changed your view in the last 13 days?
Yeah, I mean, it's gotten so much more complicated now than it was 2 weeks ago because of the conflict. We have the combination of soaring inflation and tightening financial conditions, and that is putting all of us in a bit of a bind. But it's really putting the Fed into a bind. I think the really difficult situation for them now to navigate this rate hike cycle that they've laid out the format for the last 6 months or so. Now they have to reconsider, is that the right approach to go in a very different world that we're working in?
What's the bigger risk to markets, Kathy, if the Fed goes too aggressively or more aggressively than people are currently expected, or if they pull back and become a bit more dovish?
I think the risk is more tightening than expected rather than less. The market's set. I mean, the set for a 25 basis point rate hike, and it's still building in, about 5, I think, or 6 even rate hikes this year. I think that's a big hill to climb right now, given the tightening in financial conditions. You look at the 2s10s yield curve under 25 basis points. We've never started a rate hike cycle with the curve this flat. So I think if the Fed were to deliver a dovish hike, if there is such a thing, or delay perhaps the unwinding of the balance sheet, what we might get is more steepening of the curve, a little bit of widening out, and it buys them some time to figure out what's going to happen with the war and with commodity prices and with the economy.
How much are you actually concerned and starting to game out what a recession would mean? And I say this as you're starting to see credit spreads widen to levels that we really haven't seen since 2020. We're also seeing just signs of cracks that people are getting worried about a substantial slowdown.
Yeah, it's not there yet, but it's certainly a topic of discussion right now because we've seen, commodity price spikes have led to or preceded recessions before. Flattening yield curves have preceded recessions before. We don't know what some of the ripple effects through the financial markets that we're going to see. You were just talking about margin calls. These are conditions in which credit starts to get constrained. Now, we're not seeing a big widening in spreads, but it's starting to move up. So all of those things are things that often do precede recession. So it's something we're talking about, but we're not calling for yet.
Kathy, what are you and Liz Ann Saunders seeing on flows? I mean, Schwab has such great information about not what we're talking about, but what we're actually doing. What does Schwab observe in flows in a time of war?
It's interesting. I think our investors have generally been fairly steady. There's been a bit of a movement towards safer assets, but that's really been taking place even over the last 6 months, 6 to 12 months or so. I think there was a lot of rebalancing as the stock market began to climb and inflation picked up. We saw some rebalancing there. But generally speaking, investors are pretty calm right now. They're not panicking. They're not running for the exits. They're just making some of those more subtle changes, if you will, towards more safety and liquidity.
Kathy, thank you. Kathy Jones there at Charles Schwab. Nothing subtle about this move in the bond market. 10-year yields up 8 basis points this morning to 185. Twos up by 6 to just short of 161 going into CPI on Thursday.
John, it just had a correlation. The market just changed. There's just I don't know what the news flow is. We'll figure it out in the next couple minutes. But there's definitely been a little bit of a change here to a more correlated and attractive tape. I've got Euro Swissy out over 1.01. That's weaker Swiss franc. That really confirms a lot that we've seen. Gold, gold 220 an ounce isn't helping me there, but all in all, it's a little more constructive tape.
Just chopping up the yield curve. Look at that difference between 5s and 10s if you get a chance this morning. Lisa, 5s and 10s, that spread is down to 6 basis points now.
Yeah, we're near March 2020 types of levels here. And typically when that curve inverts or when any of the yield curve inverts, it gets people's attention as a possible recession warning. Typically there's about, 12 to 18 months before a recession after a curve inversion. But still, this has been persistent, that flattening. It has been consistent, that message that we're going to see slower growth and disinflation from these higher oil prices, John.
Lisa, the focus on crude and the energy market. If you're waking up this morning, the conversation ongoing. Secretary Blinken today on his tour of Europe, Estonia, Latvia yesterday, on to France a little bit later, talking about an active conversation, Tom, on restricting, banning Russian energy. Can they do that without doing it with the Europeans?
Yeah, and he's meeting with Mr. Macron, I believe, in, I'm going to say 2 hours, maybe 3 hours. And John, to me, that's a really, really important meeting if Mr. Blinken's trying to get the blessing of Europe for the United States to act unilaterally or maybe with Britain to limit the Russian oil. To me, Macron's really sort of fits in here. The Germans, we know where they stand, don't we, John?
Well, the French aren't going without the Germans. The French aren't going without the Germans. The Germans are saying no.
Yeah,
we heard that from the finance minister. We heard that from the chancellor.
It's almost like a blessing to me. I mean, the fact is, there are allies, and Mr. Biden has made a major theme from the moment of his inauguration in recommitting to the dialogue with the allies.
Well, I think certainly
with Mr. Trump.
The events of the last week have made this decision relatively more easy for the administration than it was maybe a week ago. And Lisa, I don't think it's an easy decision. I just think in relative terms where we were a week ago, you've now got lined up public opinion. You've got corporations prepared to do it because, let's face it, many of them are already doing it. You've got Congress on your side, a bipartisan effort there down in Washington, D.C. There's not much left for the administration to make a call on. Basically, it comes down to, do we wait for the Europeans? They're telling us no. Or do we go solo? Do we fly solo and do it alone?
And frankly, that survey that you talked about overnight that showed that people largely in the United States supported higher gas prices to end the war in Ukraine gives a lot of political go-ahead also to the Biden administration.
Futures up 1/3% on the S&P and the NASDAQ, up a little more than 1/10. Crude this morning, 122. Let's round that one up for you. Up around about 2%. Yields are higher as well, up 8 basis points to 185.42 on Thursday. Couple of days away. CPI in America expecting something close to 8%. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
One of the things that really needs to happen when you look back at every oil crisis, going back to the Korean War and the 1956 Suez Crisis, you had a close cooperation and collaboration between government and industry. That has to happen here, because what's happening is the now established supply chains are buckling.
And parts of this market are breaking. Dan Yergin, Vice Chairman at S&P Global from New York. Good morning. Futures up 0.2 on the S&P, unchanged on the NASDAQ. Yields higher by 8 basis points on 10s to 185.42. Crude just south of 122, up a little more than 2% as we continue to follow Secretary Blinken across Europe. Next stop is France, Tom. We'll hear from him a little bit later. And then all looking at the administration as to what they may or may not do.
Right.
Over the next few days, Tom, as Congress makes a push to ban Russian crude, Russian energy.
We say good morning to all of you on radio and TV across this nation. And right now, Lisa, John, and I, with our conversation of the day on America's energy, given the war in Ukraine. Regina Mayer has been lauded by oil and gas investor, a rag I used to read cover to cover years ago. She's global head of energy at KPMG, and that barely describes, literally, I say, her contribution to the industry. Regina, up front for you and up front for Dan Yergin is the underinvestment in America in hydrocarbons. What does a president need to do to jumpstart investment?
But I love what you said, what Dan Yergin said, Tom, about the need for government and industry to collaborate, because in the U.S., we import 2% of our imports are Russian oil, whereas in Europe, it's 40%. So we are not dependent on Russian oil. And we have tremendous opportunity to secure U.S. energy security, as well as start to provide important gas exports with LNG to places like Europe and elsewhere. But if But government and industry needs to come together to further develop and exploit what we do have here in our country.
Russia has Siberia. We have Canada to the north. How do we link our oil underinvestment with Trudeau's gift up north?
Well, the Canadian oil sands work really well with our refining footprint, so that is definitely a key source of supply. Our neighbors to the south provide really good sources of crude that fit our refining complexes as well. So if we were to better establish corridors between Canada and Mexico, we could further strengthen the fossil fuel footprint that could fuel the rest of the world.
Regina, a lot of people are pointing the finger at the Biden administration for not investing more, encouraging more investment in the shale and oil and gas industries in the United States. However, a lot of creditors, a lot of investors have also really called for more discretion, more financial discipline, and that is what we have heard again and again from a lot of executives in this area. Has that started to shift, or is that really still the theme, forget the administration, from the shale and the oil and gas industries themselves?
Lisa, the companies that work in this area are under a lot of pressure from their investors to focus on dividends, to focus on cash, to focus on return on investment and return on capital employed. So you're still seeing signals from major U.S. players that they're going to stick to the CapEx outlooks that they've provided for this year. And even some are saying for the next 3 to 5 years. So they're demonstrating that they're not going to be go drill, baby, drill and get frothy with the price of oil. But I do think that there's a happy medium that we should strike, because there's 4 pillars of energy, right? Security, reliability, affordability, sustainability. When supplies are secure, reliable, and affordable, we focused a lot on sustainability. Now when supplies are not as secure and not as affordable and not as reliable, that's where we need to double down.
Regina, there have been a lot of calls about the profits that a lot of energy companies have made over the pandemic and the resurgence in oil prices after that. And people talk about in this period how awkward it's going to be for them to report incredible earnings at a time when a lot of consumers are maybe even cutting back on other purchases. What do you see going forward about how they game out their pricing, how they game out their social role in addition to their business one?
Well, this is the opportunity for the industry to lead from the front on sustainability, because they're going to be able to take those profits from the crisis that we're facing now and use it to fuel forward clean, sustainable energy technologies. How do we do more around carbon capture and sequestration? How do we do more with hydrogen? How do we do more with electrifying the transport? So I think that's going to be their social message. And I think they're going to work really hard to try to make supplies reliable, secure, and affordable as well.
Regina, what's the KPMG treatment and accounting of an excess profits tax on big oil?
That's not an area, Tom, where I am even.
Oh, come on, but you've read the 40, stop it, you went to Cornell. You've read the 40-page memos cover to cover. How close are we to a debate over an excess profit tax for those terrible big oil companies?
I would never say that, and I hope that that's not where we're going to go. I do think that we need to remember that there are lots of sectors that benefit from cycles, and we're in one of those cycles, and I know the industry is going to figure out how to leverage effectively gains from this cycle to go into down cycles as well as to finance the future.
Regina Mayer, thank you, of KPMG. Always appreciate it. Tom, did you see the administration's push yesterday? Pete Buttigieg, go out and buy an electric car if you're worried about gas prices. I mean, sometimes they can't get out their own way, can they?
Yeah, like, John, you said that to me 3 times over a beverage of our choice.
That's
I'm going to cut
true,
him some slack. When you have a war, when you have the news cycle, the exhaustion, John, that we've had for 13 days, and trust me, folks, the team has been great. I'm sorry, the lights are very bright and some silly things can be said, John.
I know, Tom, but isn't that the kind of elitist out-of-touch line you'd expect? Go out and buy an $80,000
John,
electric
don't
car.
take me there.
Don't worry about
See
crude
what
at
he's doing,
122.
Lisa? The Brahma camera's on this right now.
The promo cam can go off now. I'm just listening to this. Honestly, it is tone deaf. It's also from a very practical standpoint. I mean, the price of electric cars are going up dramatically because nickel and aluminum and all the metals and the lithium and everything that goes into it also are surging. I mean, this is a much broader issue. You just do wonder how much you can support an industry that is considered to be not antiquated but phased out while also supporting another one, and how much do you engage them? At some point, President Biden has to head down to Houston. He's got to meet with some of these leaders.
Well, they have to head up to him.
Either way, sure.
You know, pick up the phone. Even Elon Musk this week, did you see that? Tweeted that we need to boost production
John, you know,
of fossil fuels.
I'm sorry. We have to remember that right now there are people dying in some of these cities from lack of water. I think the refugee images, some that we've seen, are absolutely heartbreaking in the prosperity of Ukraine, and they're dashing from their prosperity, from their agriculture, from their technology, including leading in nuclear. I mean, there's a crisis at hand, and some stupid things get said, and hopefully the president...
Precisely, Tom, and you've got the US public, going by one poll,
70-some
very
percent.
happy, very happy to pay higher gas prices because of what's happening in Ukraine.
I mean, you know, 4 p.m. this
the
afternoon.
Public's there. Public opinion is there, clearly in support of that effort. Congress is there, clearly in support of that effort. We're waiting for the administration's decision, an active conversation. Futures up a tenth on the S&P, down 0.2 on the Nasdaq. Yields up by 7 basis points on 10s to 185. Let's call it crude, just south of 122, up a couple of percentage points. From New York, this is Bloomberg.
nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes. Según las modificaciones, nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
The focus is on the Russia-Ukraine situation, which clearly leads to a flight to quality.
We view this as a growth scare, something that doesn't necessarily push us into a recession, but makes everyone feel like we're going to hit one.
Significantly higher gasoline prices are absolutely guaranteed.
So, what we have is a potentially stagflationary shock.
The longer it drags on, I think the more economic damage it will do.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio, on television. An eventful Tuesday. Diplomacy in Europe. The reality of what markets signal. John, any number of ways to go here. I'm going to go with oil, $126 a barrel on Brent.
So let's build on that, Tom. The policy effort, the next step for the U.S. administration, an active conversation about banning the import of Russian energy. The Germans said no. Will they go it alone and fly solo without their European allies? That's the conversation this morning, Tom.
And some of that may be with Great Britain as well. Prime Minister Johnson, to me, and I would suggest, John, in modest support of what the president's dealing with.
Because he can handle it in a way that the Europeans can't. President Biden in this country can perhaps handle it in a way the Europeans can't. The Europeans, likely, Tom, after they've said no, I'd be very, very surprised if they came along for the ride this morning, wouldn't you?
Well, yeah, we'll have to see on that. I mean, I just wonder. I wonder what Mr. Blinken will say to Mr. Macron here later in the European afternoon. We should see that in 2 or 3 hours. John, I look at the market and off the difficulty of yesterday, bonds show a really interesting story, up 8 basis points on the 10-year yield.
185, and this curve, in certain segments of it, getting flatter. That spread between, say, 5s and 10s getting tighter. And all of this going into CPI on Thursday morning, where we look for CPI in America, inflation in America, to be somewhere close to 8%, Tom.
And inflation coming up in 2 days here, that important report we've been talking about for weeks. Lisa Abramowitz will touch on this with Lisa Shallett, but let's start with you. I look at the bond market, I look at the dynamics, and then there's the actual call of that auction you mentioned, a 3-year auction today. And, America is the capital markets of last resort.
Well, it goes to the question of what does the Fed do in this very difficult moment where people are talking about stagflation, where they're talking about hiking into a slowing economic sector. At the same time, you're dealing with the idea of inflation that's accelerating, and for all the wrong reasons. How much are we pricing in some sort of recession? Frankly, when we talk about the price of oil, how much are we actually pricing in these bands, and how much further does it have to go? That's really one of the big questions today.
John, we've got to touch on this because I think, we're sort of jaded by it, but we really are seeing an original moment in finance history with the London Metals Exchange dealing with one investor in China who got it wrong on nickel. And for our audience, it's not sophisticated. For the sophisticates, this is a huge deal.
Probably more than one man as well, Tom. What we understand, there's a Chinese tycoon known as the Big Shot in Chinese commodity circles, who is now facing, reportedly, according to our reporting, billions of dollars in mark-to-market losses after nickel went through 100,000 a ton. Tom, in today's trading, up 170%. More than that in just 2 days. Unreal. So the LME's basically had to shut down trading. One of his brokers faced a margin call. They got a little bit of extra time to pay it. We understand, according to a person familiar with the matter, that CCBI, that's an international unit of China Construction Bank, has now paid the outstanding margin calls. But, Tom, this takes a lot of time to untangle. Yeah. It's unraveling before our very eyes in real time.
Let's do the data here, but you need to stay with us this hour, folks. Leslie Vinja-Murray will give us a brief from London here in a moment. Diane Swank on The View from Chicago on this economy. John, the data, what gets your attention?
Right now, Tom, Crude, 121.50.
Yeah.
We've got to work this one out because this is difficult. Corporations are making a call to pull back from Russian energy. Shell, a great example of that earlier this morning. Public opinion is supporting that effort. Congress supports that effort. The Germans do not support that effort. Where does the administration go? That's got to be our focus through today, through this week, until we get a final decision from the White House.
Rosalind Matheson and our European team focused on the Secretary of State traveling from Estonia to France as we speak. We begin strong with Lisa Shallett, Chief Investment Officer at Morgan Stanley Wealth Management. Lisa, what have you changed in your outlook given the 13 days of war in Ukraine?
Well, I mean, that's an interesting question, Tom, because the news is moving at lightning speed, and markets have done so along with it. What I think has staggered us the most is that for all of that volatility, we're actually not in that different of a place on the U.S. stock indices. And, we've moved maybe, 1 or 2%. And so I think the biggest thing that has been, shocking to us is that, to your point, these scenarios of stagflation, these scenarios of the probability of recession going up haven't had a more severe impact on U.S. equity markets. So I think that's what surprised us. So to be honest, we had been on the more bearish side coming into this. And so to a certain extent, we're still waiting for the market to, quote unquote, come to us and, discount a little bit more of a severe economic slowing, both from the perspective of lower corporate earnings, but also with higher risk premiums, which means lower price earnings multiples.
Let's start with the earnings story first and then get to the multiple on that earnings story. Lisa, a lot of people are trying to work out what these gas prices, this oil figure at 122, means for the consumer. Do you think it takes away discretionary spending from elsewhere, or do we start to see a lift in credit? What are you seeing in the data? What should you expect, and what does it mean for how you allocate capital around the consumer in America?
Yeah, so, we know that gas prices historically are a tax on consumers. This time will not be different. What's unfortunate is that, most forecasters, including us, were expecting a pretty significant resurgence in the services side of the economy come spring, summer, as we're getting, beyond the worst of COVID. We were expecting, huge pickups in things like travel and vacation-linked items. And I think that that's really going to be one of the areas where we see the severe impacts of these kind of energy prices, particularly if they're persistent. Our call for to own consumer services has really had to become a lot more muted, and that's where our concern is focusing, is on consumer behavior.
Lisa, when we talk about multiples, it has to do also with Fed policy, with the idea that rates may not go lower in response to this shock, but rather the opposite. And that's certainly what a number of people are considering with that still 7 rate hike call over at Bank of America, as John was mentioning. How have you rejiggered your expectations for the Fed, for yields and the relationship, as negative real yields don't seem to make a difference right now for this risk sector?
Yeah, so look, the Fed is in an incredibly tough position, and our sense is they absolutely positively have to get off the zero bound, if for no other reason then they need some dry powder to do something in the next 6 months if in fact we have a recession. And so I know that this sounds perverse, but they kind of have to give themselves some room while they still can. And so, we're in the camp that says, Powell's got to stick to his guns here. He's got to get at least 2 or 3 hikes in, before kind of the fourth quarter. Now, that's nowhere near maybe the 6 or 7 that were discounted, at the worst moments. But I think what this really puts into question is whether they can do balance sheet action, because as we know, when you have these kind of huge spikes in commodity prices, it really has an impact on global dollar liquidity. And so, we had been in the camp that says, he's really got to start working that balance sheet and working balance sheet down. I think that's the thing that more than interest rate hikes that's been thrown into question is whether they can do anything on the balance sheet with this kind of market turbulence.
Lisa Shallett, thank you, as always, from Morgan Stanley. A tough time for anyone trying to work in this equity market and work out the future here. Looking ahead to Thursday, these are the estimates. So Mike Ferroli over at JP Morgan goes with 8%. Morgan Stanley, Ellen Zentner of the team go at 8%. Mike Gapon and Barclays at 7.9. Ethan Harrison, Bank of America at 7.9. The median, Tom, is 7.8, but some really well-known figures there on Wall Street looking for an 8 handle.
Yeah, they're looking for an 8 handle, and then we'll see from there. I mean, I guess I really wonder, John, does the Thursday inflation report matter anymore? Because it's such old news. I mean, I can't believe I'm saying that.
Well, Tom, I can. We ignored payrolls, didn't we?
Yeah.
That's what we did on Friday, Lisa. Are we going to ignore
We're going to ignore
CPI on
8%
Thursday?
inflation?
8% in America.
Except that it's a starting point rather than an ending point. A lot of people thought that we were going to see peak oil prices and peak energy, peak inflation, and that's obviously off the table right now.
John, can I point out, and I want to be careful here because we don't do technical analysis tick by tick on surveillance, but the fact is I'm going to do it, John. Oil coming off the bottom of yesterday is making a series of higher lows. That's not an opinion, that's a fact.
The year-to-date move now, looking along the year-to-date column on the Bloomberg terminal, up 62% year-to-date. On WTI, up 63%. There's the move. The President of the United States set to ban U.S. imports of Russian crude as soon as today. The headline from our team at Bloomberg. The President of the United States set to ban U.S. imports of Russian crude as soon as today. Here's the important additional headline. The U.S. will do this without the participation of European allies. I'll go through this again. The President, according to our sources, set to ban U.S. imports of Russian crude as soon as today, and they will do that without the participation of European allies. Crude right now, 122.70, up by 2.7%, standing by AMH down in D.C. Anne-Marie, you have break this one. Walk us through it.
Well, John, it's pretty obvious given the fact that the administration has come under immense amount of pressure. One, if they weren't going to announce this, it was going to come from Capitol Hill. The second is we need to remember these imports of Russian oil and other petroleum products already on a massive low into the United States because already the market for 6 days, market participants have been shutting these assets. They do not want to deal with what is now considered potentially Putin's toxic assets. They didn't know if legally it would be an issue, morally obligations. So already this was already happening in the industry, and now the U.S. is just putting a stamp on it. The more interesting part is that obviously this is them acting unilaterally in the sense that we did have Canada also do this, but Canada imports so little because they are a major producer. But still, this will put more pressure now on Europe, which at the moment just cannot do it. They cannot survive without Russian fossil fuels.
So walk us through the details here, Anne-Marie, of exactly what they're going to be banning, of how long it's going to last, of whether it's retroactive. What exactly are the logistics of putting through a ban like this unilaterally, given the fact that Russian imports may only account for 3% of all crude shipments, but 8% of all refined goods and other petroleum products?
Yeah, well, considering also in this ban is oil, LNG, and coal, but obviously oil is the most important one. And while it sounds like a little bit, Russian imports into the United States actually ranked third, ahead of Canada and Mexico, and even before a U.S. key ally in the Gulf, Saudi Arabia. Now, for a while, this was a huge feat and win for the Kremlin. President Putin has wanted to kill U.S. shale. That's part of the reason why they were so almost reckless in sense of the price war during the pandemic in 2020. And then they were also just exuberant in the fact that actually the United States of America was accepting Russian crude even over a key Saudi ally. So symbolically, this is very important. Unsure of how long this could last, but it's in the sense that we've seen similar sanctions on other fossil fuel products from the likes of Venezuela and Iran.
Good morning on Bloomberg Television and Radio. On radio, let me make clear, the president bans Russian oil. That is the headline. And John, we just see moments ago the spike up from 126 up to a 127. A 128.00, John, would be a breach of the intraday high. We're not there yet.
We haven't had that official announcement just yet. According to our sources, that will happen as soon as today and will happen without the participation of European European allies. So, Anne-Marie, let's talk about that. With crude at 127, there was a consideration going into the weekend that the American administration, if they were to make this decision, they had to consider that if others did not participate, they would be hurting themselves without actually hurting the Russian economy. How does that calculus stack up this morning, Anne-Marie?
Well, I think the issue is that any imports that obviously Russia would have been sending to the United States, they'll find buyers now, given how high priced crude is, potentially mostly to Asia, right? And you had Alexander Novak coming out and basically saying that yesterday. He's deputy prime minister to President Putin, but he is their chief energy diplomat. He has run the energy ministry until he was appointed deputy prime minister. He's the chief OPEC Plus negotiator, and he came out on Russian television yesterday with some fiery words, almost threatening to use Nord Stream 1 against the Europeans, which is flowing every day to heat European homes, but also saying if the United States and others refuse our oil, we have other places to send them. And likely other places to send them is going to be China, which we even saw during the pandemic start to hoard fossil fuels.
In your world, Anne-Marie, there will be a balance here of politics. And the politics is basically, let's go, let's produce more oil. And there's another side which says we have a long-term commitment to climate, to ESG. How will that play out in the next 24 hours?
Well, this administration is going to want to emphasize the ESG part, or the sense that we should be putting more money towards things like solar, wind, nuclear, the technology that the United States has that could potentially mean less reliance on oil, and not just foreign oil. The United States is a massive producer on our own oil, just to have a cleaner energy grid. They're also going to have to walk a fine line, right?
Yeah.
Because they are getting a ton of pushback from Republicans who say that this administration has not been welcoming, let's call it, to the fossil fuel industry the way the prior administration was. And they are blaming the administration for the issues you have today when it comes to higher prices at the gasoline pump.
To that exact point, Anne-Marie, has there been any discussion about having a meeting with those oil and shale producers in the United States with President Biden at some point in the near future?
I have not heard anything about a meeting the way we saw with potentially GM, Ford, or some other during the supply chain havoc when you had executives come in. The president was flanked by them across these big tables. But in my reporting, I do know that there have been individuals in the administration talking to the shale patch, talking to U.S. producers about this. So it's not like there hasn't been communication. That would be false.
Anne-Marie, for anyone just tuning in, crude right now 124 on WTI, up 3.9%. Brent crude at 128, up a little more than 4%. The headline reads as follows: the president said to ban U.S. imports of Russian oil as soon as today. They will do that without European allies. In the last 24 hours, we heard repeatedly from the Germans, the finance minister, the chancellor, no, we will not participate. We do not want to do that. Now, Anne-Marie, I want to be very specific about this in your reporting. I think it's important to reiterate and go over again. Is this just Russian crude or Russian oil products, Russian energy products? Which one is it? Because one makes up 3% of U.S. imports, as you have repeatedly indicated. The other is 8%. Which one is it?
Well, at the moment, John, all I know is that the language is oil at this moment. I'm not sure if that is going to include oil products, right? Because it is very hard sometimes to differentiate how some of these oil products actually look very close to 1 barrel of crude. So we're still waiting on a little bit more details on that. We should be clear. And you are right, Jonathan, because it is a big difference. 3% is hardcore crude. 8% encapsulates everything, all those other petroleum products, which is a lot larger of a number than 3%. But again, we should repeat, for days, the industry is shunning these assets coming into America. Refiners don't want it. It's very hard to get ships to go get it. You had Shell this morning say they also will not buy on the spot market. You can just see the industry is self-sanctioning, and now the administration is basically solidifying something that has already been happening for days in the physical market.
Very, very true. Anne-Marie, great reporting to you and the team down in Washington. Thank you. That Bloomberg exclusive then, according to people familiar with the matter, the Biden administration poised to impose a ban on U.S. imports of Russian energy as soon as today, without the participation of European allies. This is what the market looks like off the back of it. Down 1/10 on the S&P, on the Nasdaq, down 0.5%. Crude at 124 on WTI, up by around about 4 percentage points, Tom. And Brent crude again approaching 130. So the Europeans, Tom, not in the mix. The ban, Russian oil, liquefied natural gas, and coal. This according to 2 people familiar with the decision. The decision was made in consultation with European allies, who, of course, as we know, rely more heavily on the US than the US does on Russian energy. Tom, so that's the situation.
On an informal basis, John, the next technical breach for Brent crude is a 131 print. We're not there yet. We did get that spike up near 140 earlier, but just for a brief shining moment. We have a perfect guest to follow on from the work of Anne-Marie Horton in Washington and London, Leslie Vinjamuri, Director of U.S. and America's Program at Chatham House as well. Leslie, I want to immediately go to the special relationship which is Great Britain and the United States. Will Prime Minister Johnson, should he join President Biden in this kind of blockage of Russian hydrocarbons?
I think Prime Minister Johnson will wish to do that. Certainly the UK is less dependent on Russia's exports of energy than other European countries. Obviously, Germany is on the other end of that extreme. So I think that, the UK has wanted to stand very tall alongside the United States. The symbolic appeal that Boris Johnson gets from this is significant. Being able to demonstrate a sanction that, again, that the UK won't pay as strong a price for. But the UK is also balancing its interest in, continuing to pull together with Europe. Still, I think that there's a very real possibility that the UK does follow.
Does the Biden action, when we hear the announcement, does it touch upon Nord Stream 1 or the development of Nord Stream 2? Can you link the two together, or are they discrete?
No, I think that the Biden administration announcement is interesting for a couple of reasons, Tom. I mean, to go beyond your point, one is that the political consensus in the U.S. was very different, very much less. Even a week ago now, the pressure really for some of these sanctions is coming from Congress. It's bipartisan. That in and of itself is significant. There are some more cynical that think that Republicans are pushing this because then they can blame the Democrats and President Biden for increases and spikes at the gas tanks and gas prices. But again, the U.S. is, as with the UK, relatively independent, very independent of Russian energy supplies. And I think there's also a desire, and this is, very much driven by the Republicans, to push on that Nord Stream 2 question, as we've seen. That's been halted, to take a hard line on Russia on these particular issues, and perhaps to drive some pressure on Europe to come on board. That seems increasingly unlikely, however.
Leslie, in terms of the American leadership in taking charge here and leading the way, I wonder what the response is to China's supposed exploration of buying stakes in commodity companies in Russia, in gas companies, in coal companies, in anything that could shore up their security. Does that create a quagmire for the United States that feels compelled to respond in some capacity to that alliance?
Well, there's no doubt that Russia has not taken a public position. It has not condemned Russia for its violation of Ukraine's sovereignty. It's abstained on the UN Security Council vote, on the UNGA Assembly vote. And it is enabling Russia to survive economically by providing it options. We're seeing that. I think at the same time, we know China's not happy. It doesn't like this kind of instability. The question, I think, for all of us is whether it will be quietly pursuing diplomacy to try and persuade Russia as time moves on to accept some sort of ceasefire or some sort of negotiated settlement. But right now, it looks like Russia is, in fact, doubling down on its partnership with Russia and China, doubling down on that partnership in a way that really weakens the impact of Western sanctions.
Leslie, as oil prices surge, and we are seeing that rally continue here after the announcement of the plans that the United States administration has to announce a ban on certain Russian crude products, I'm curious from your perspective about how much political clout this will give President Biden in terms of what you were talking about, the fact that so many people actually are willing to absorb the cost of this in higher gas prices in order to stop the Ukrainian war.
I think right now those images of ordinary people, women, children, men suffering, being killed, well over 1 million refugees, those images are really playing to the consciousness of the American people. There is very strong public support for taking a hard line. It's not entirely the same between Republicans and Democrats, but it is very strong. The question, of course, is if this conflict, if this war continues for a very long time, will that unity break down, especially as inflation continues, as prices hit Americans' pocketbooks? But I think right now, there really is very strong support for taking a very hard line. I mean, the brutality is unparalleled. It's very significant, and Americans are seeing it on their televisions.
Leslie, thanks for being with us. Leslie Vinja-Murray there of Chatham House. Crude 124 on WTI, up around about 3.8%, approaching 128 on Brent. The stories from our team down in Washington, D.C. here at Bloomberg. The Biden administration is poised to impose a ban on U.S. imports of Russian energy. That could happen as soon as today, Tom. That will happen without European allies.
It'll happen without allies. And as you mentioned, John, I believe LNG and coal in there as well is a part of the headlines, and we'll see those announcements. I think the market reaction is pretty much as expected, a little bit of a lift to Brent crude. Maybe we'll see more when the president speaks, if that is scheduled for today. But, John, you know, it's day 13 of this war. We hear from the United States. We heard from Shell. We heard from LME. We haven't heard from Russia much, and that to me is the dominant theme today.
About the counter-sanctions to the sanctions, and it's something we've got to look out for. Bear in mind the journey we've been on here. On Friday, the low of the session was 109. We had a story come out in the afternoon from us here at Bloomberg that this is something the administration was thinking about. We had confirmation that they were thinking about it over the weekend. Lisa, we had a huge move off the back of that, and now we add to it again.
The question is, has it fully been priced in for when it gets announced, or is there a further upside move from here?
We are reporting that it could be announced as soon as today. Futures down 0.2 on the S&P from New York. This is Bloomberg.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Live from New York City, futures up 0.1% on the S&P and the Nasdaq up 0.4%. Crude looks like this: 124 on WTI. Brent at 128. The reporting from the team down in Washington, according to people familiar with the matter, the Biden administration poised to impose a ban on U.S. imports of Russian oil, liquefied natural gas, and coal. That could come, that announcement could come as soon as today. It will happen, Tom, if it does happen today, without the participation of European allies.
Well, very much, and of course, critically, without Great Britain as well. We just spoke to Leslie Vinjamuri about that, John. It'll be very interesting to see how Prime Minister Johnson reacts to this.
I agree with you, Tom. Very different dependency, of course, for Europe versus the United States and for the UK versus Europe too. No indication in our story whether it's about the UK. I think this is more about Germany, Tom.
Oh, yeah.
Germany
absolutely.
and France. And the Germans have been pretty clear over the past 24 hours.
Well,
so for the market, we've got to move, haven't we? Is it a major move? Not a major move because we've priced in so much over the last couple of days. As we've talked about, Congress was pushing in this direction. They've been open about having this conversation already.
Right.
The oil majors are already pushing in this direction.
Well, the tape is strange. And again, John, I would say with Brent crude, 128.39, a 131 print is important there. We're decidedly not there yet. Right now, Timna Tanners joins us, a metal and mining analyst at Wolf Research. She is exquisite on what you do with all this stuff because you turn it into steel and other stuff. We're thrilled she could join us on short notice this morning. Timna, you're in Toledo at CLF's hot briquetted factory. You're in a factory in Toledo, Ohio, where they take all this stuff we're talking about and they actually make stuff. What do the people in Toledo in that factory think of the commodity cycle we're in right now?
Well, thank you for having me. Good morning. The fact is that the situation in Russia-Ukraine invasion is critical for raw materials across our coverage. And in particular, when we look at the steel industry, the big impact is the complete squeeze on raw materials. And so this facility actually in Toledo, Ohio, is a real hedge for Cliffs, which we cover, in enabling them to buffer themselves against this super squeeze in pig iron. Russia and Ukraine comprise 2/3 of the U.S. pig iron imports. And so this is the nice offset made in the USA to that import situation.
Can you substitute in your world, if there's a given raw material from Russia, is it easy to substitute Chile as one example?
No, it's really not. And I think, you know, of course, it depends on the commodity, right? I can't make a blanket statement. But if you look at palladium, which we don't cover, but you can see it's 20% Russia. And like I mentioned with pig iron, it's 2/3 Ukraine and Russia, and the alternative is Brazil, and they certainly can't compensate for that lost production. And you think about a mine, you know, it's really not a switch that you flip, right? And even if it were, you know, you'd take, even if you did have capacity, it would take, you know, easily 3, 6, 12 months to restart many of these. Many production facilities are off for a reason because it's antiquated technology. They don't have the electricity or the labor. And it's hard for producers to decide to make that decision anyway because they don't know how long this is going to last. And it's an economic very big economic decision for them.
Tim, now we're prepared for some sort of announcement from President Biden about bans on imports of Russian crude. What would the consequences be to the metals market if there was a similar ban on aluminum, on tin, on some of these other metals that really are significantly imported from Russia to the United States?
Look, the aluminum market is a global market. The Americas are net short aluminum, but already the market until this morning, I guess, was pricing in a pretty big shortfall. So it's hard to figure exactly what happens. But net, I mean, Russia is about 6% of the aluminum market. That one in particular, we think, is very affected because it's not only the direct Russia production, Ukraine production, but also the impact indirectly on higher power prices in Europe. So that's why I think is one of the commodities that's most squeezed right now. But you also look at anything with a lot of energy input. You look at zinc refineries, zinc prices are up. Russia's a huge producer of nickel. I think you can see what's happened with nickel recently. It's phenomenal. And it's a little scary if you need it, right?
Well, but exactly, that's where I was going to go, the financialization of the commodities market. You're talking about the on the ground, getting the metal out of the ground and giving it to people who need it for products, et cetera. And yet we're dealing with something that's highly financialized, highly leveraged, and you're seeing massive disruptions. How much are the moves that we're seeing in some of the pricing due to that and not necessarily the true shortfalls or a gauge of supply and demand in the physical market?
Physically, these products are short. When we're talking about anything traded on the LME prior to these disruptions, the markets were already very tight. Now, that said, if this situation will resolve tomorrow, hypothetically, of course, the commodities would definitely retreat in the case of nickel, for example. But there's been actual physical disruptions of alumina production in Ukraine, of a large facility and refinery there. So it's a little bit of both. But yeah, there's no quick production fix. And in some cases, there have been, irreparable, damage done to ports and infrastructure that are going to have longer lasting effects.
10:45 Eastern, we will hear from the President of the United States, Tom, on holding Russia accountable. 10:45 Eastern, will we hear from the President of the United States on holding Russia accountable, as we report this morning, according to people familiar with the matter, that the President is set to ban U.S. imports of Russian crude as soon as today. So, Tom, we'll hear from the President, should be hearing from the President in the next couple of hours.
I'm bringing up Brent crude here to see if we have enough lift up. We're at a 129 level. Yes, we come up nicely, 129, not up through 131 yet. That's my key level on Brent crude. Tim, I'm fascinated within the hyper detail of your note and your visits that there's always that great mystery of China and their inventories of metals. In the years that I've done this, it's always a great mystery. Do you have any understanding of what the true story is of China's inventory of these raw materials or finished products?
I can't say that I've figured out China and definitely not that angle either, but I would say that, it definitely depends on the commodity. But if we're talking about some of these base metals, China is not a natural producer of them. If you're talking about aluminum and steel, yes, they are 50% of the market and could amp up if they needed to, but if they'd have to have the raw materials, and that's where the squeeze is. It's in iron ore, it's in coal, it's in alumina and bauxite, and that's where it's a cost problem, maybe not a scarcity problem if they do decide to ramp up.
Can we have a technological application given this crisis where we are more efficient with our metals, finishing our metals product? I think of Nucor years ago and what Nucor wrought. Can we have another technological leap in your world if it's so expensive again?
Look, I think this will be a wake-up call to the markets to say, look, do we really want to see a commodity that's so dependent on Russia, Ukraine, or on any given region, right? And I think that over time, there'll be more and more initiatives to develop technologies and alternatives. However, we're not talking about, months or quarters. We're talking about several years. And I think by the end of the decade, you'll see, again, more alternatives to raw materials. And you're seeing already efforts to mine off the ocean floor, which could supplement nickel, for example, which is particularly scarce.
Tim, now all morning we've been talking about how long the conflict will last and what the longer-term ramifications will be on the economy as well as on some of these specific markets. Can you give us a sense of how difficult it is to turn off some of these inputs in terms of where we import some of these products and then turn them back on? I mean, how long do you expect some of these disruptions to last regardless of how long the conflict persists?
Yeah, that's a great point. I think, if we're talking about the infrastructure, I'm not an expert in the conditions of the rails and the ports, but from our understanding, those have been damaged, and so that would have to be repaired. I heard that half of the rails that were operating out of Ukraine were not operable, but then half are. So that would just be a bottleneck, obviously. And then in terms of whether it's a mine or whether it's an operating facility, an alumina refinery in Ukraine, that's 1.75 million tons, is a significant producer globally. When you shut that down, it doesn't, you can't flip a switch and restart that. Plus, you need to have material on the ground to run it and have a power supply. So that could take, at best, months to restart. And then if you have a steel mill orderly shutdown, it could be quick to restart. And if you have a mine, you could restart it. But again, it depends on having the people, the power, the materials on the ground. I think the bigger question is what's the state of the country when, things are resolved and how quickly they can try to produce again. So far, it seems like there's actually still shipments of oil and shipments of iron ore and met coal even as of last week. So, I think it'll just be slow moving at first when things are repaired.
Timna, thank you. Timna Tanner there of Wolf Research. Lots changed in the last 30 minutes. 10:45 Eastern, we'll hear from the President of the United States. He's set to announce, quote, actions to continue to hold Russia accountable for its unprovoked and unjustified war on Ukraine. Look out for that a little bit later. We've reported around about 30 minutes ago, the Biden administration is poised to impose a ban on U.S. imports of Russian crude, Russian energy, Russian oil, liquefied natural gas and coal, and they will do that without European allies, Tom. We have to talk about objectives here, don't we? Is this about changing Vladimir Putin's behavior? If the European allies don't join, how effective will it be in that regard, Tom? Is it about hurting the economy, or is it just about taking a moral stance now? Is this a moral obligation of the U.S. to do this? And I think overwhelmingly that's been the sense, the shift in the last few days.
Well, that's what we've seen, given the horror of what we're seeing in Ukraine. But what's so important here, John, is it's an easy decision for a president where these products, including, John, you mentioned finished products, really aren't all that much. We forget how dominant this is, particularly in Eastern and Central Europe, in Germany. To be clear, I mean, the gap, John, just from Germany over to Great Britain is extensive here.
Oh, it's a big gap, and obviously a bigger gap from Germany, from Europe to the U.S. Oil imports into America, 3% of them come from Russia. Crude products, that's a different story. That's about 8% of total imports. But the market's already turning in that direction, Lisa, and that's been the shift. That statement from Shell this morning, I mean, that's all you need to know, isn't it? Shell essentially apologizing for buying Russian crude last week and essentially pledging not to be doing it again.
Yeah, how much is this a good political move for President Biden above all, as a shift in sentiment really has gone with him? And how much cover does this give him for gas prices that were already going up and now we're going up further, but people feel more willing to accept some of those increases?
Great reporting from the team here at Bloomberg. You will hear from the president at 10:45 Eastern Time. Brent crude approaching 130 from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Bloomberg's learned that the Biden administration is set to ban U.S. imports of Russian energy as soon as today. The ban will include oil, liquefied natural gas and coal. The U.S. making its move without the participation of its European allies who rely heavily on Russian energy. And Russia is threatening to cut off natural gas supplies to Europe. That's part of Moscow's response to sanctions imposed over the invasion of Ukraine. It's a move that could heighten the turmoil in those energy markets and drive consumer prices even higher. Meanwhile, the French energy company Engie says it will keep buying natural gas from Russia. Bloomberg spoke with the company's CEO.
At this stage, we continue to buy the gas from Russia. We are obviously thinking about continue to be there for our customers, and that is really what is driving us. And of course, again, sanctions, should sanctions be decided at the European level, of course we would comply.
Earlier, McGregor said that a Russian gas cutoff in Europe could lead to rationing for industry and consumers. And Yum Brands is suspending investment in restaurant development in Russia. The company is about 1,000 KFC and 50 Pizza Hut restaurants there. Almost all of them are operated under franchise agreements. Yum is also donating $1 million to the Red Cross for those affected by the invasion of Ukraine. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
first step in building a connectome is to get your hands on some brains and then cut them up. It all sounds very grim, but Harvard turns out to be quite efficient with its brain harvesting. Jeff's lab can do a year's worth of research with a single mouse brain. Small chunks of the brain are fed into the slicer, where a diamond blade carves off a thin sliver of tissue. The tissue floats along some liquid and onto a piece of tape. The brain slices are then put into this very large machine, where they're photographed in the finest of detail. Software helps stitch the pictures back together into a single 3D image, and algorithms are applied to help make sense of what's going on inside of the brain.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I'm here at the Delhi airport, and behind me you can see SpiceJet's 737 MAX aircraft. That Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
From New York City.
In London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
We have a responsibility to ensure the conflict does not escalate and spread beyond Ukraine. That would be even more dangerous, destructive, and even more deadly. The situation could spiral out of control.
The gentleman from NATO and from Norway, Jens Stoltenberg, there with important comments this morning. Again, Secretary Blinken is moving from Estonia to France. We hope to bring you on Bloomberg Television and radio the headlines from Mr. Blinken's visit with Mr. Macron in Paris. I believe, I should say, we should see that in 2 hours, maybe 3 hours, but almost to the minute, 2 hours from now, we'll hear from the President of the United States on his important announcements on oil imports, hydrocarbon imports from Russia. We get a domestic perspective now. She's been more than patient in this hour in joining us, Diane Swank, Chief Economist at Grant Thornton. Diane, I'm absolutely fascinated in all of your commitment to our Fed Day coverage as well. What kind of Fed Day do you expect that we'll see given this historic news flow?
Well, the timing just couldn't come at a worse time, as it's adding fuel to an already well-kindled inflation fire for the Federal Reserve. And we've seen certainly Jay Powell's commitment to still raise rates by a quarter point at the March meeting. And I think it's really important to understand that we risk seeing a much more entrenched inflation, not exactly the same as the 1970s, but eerie resemblance. And in his testimony to Congress, he made a point of saying we are looking at the 1970s as a benchmark to avoid, not to repeat. Well, that means that the Federal Reserve has to actually combat a lot of the demand side of this inflation,
right,
even as we're seeing the supply shocks pile through from Russia.
You and I have lived the measured of Alan Greenspan. With this war in Ukraine, can the Fed and their well-meaning economists, can they just get away from measured and say, look, we're going to act, we're going to raise rates, but it's a one-off?
I think they have to be very cognizant of saying they're not going to allow inflation to get out of control any further. They're already behind the curve. This puts them in a very bad position. And I think one of the hard things for the Federal Reserve is the tightrope that Jay Powell is going to be walking between wanting to raise rates and stem inflationary pressures and stop inflation from becoming a recession with stagflation without tipping financial markets into a larger credit market seizure. That would do the job for the Fed, but be much harder to recover from. And that's a very fine tightrope to walk at this stage of the game.
Diane, there's also the question of the economic bleed through of higher gas prices as they do reach the highest, at least on a nominal basis, on record. What is the consequence for the average American family, given that gas prices are now north of $4 a gallon?
Well, we've done calculations. Last year, it was over almost $1,000 per household, the record increase on a nominal basis that we saw in prices at the pump coming out of the pandemic. Now, this adds another $850 to $900 per household, and that wipes out much of the excess savings in the lower, certainly quartile of households that they were able to really slammed. That's at the same time that they're much more vulnerable to the rising rents and escalating rents that we're seeing out there and all the other aspects of inflation. It really is a very different sort of inequality issue that we're facing, because also those who can work from home have the ability to hedge against and blunt the blow of higher commute costs, when those who have to work in person in lower wage jobs cannot blunt that blow of higher commute costs, and that's all compounding the inflationary impact on them.
So do you think that, Diane, potentially we could avoid returning to some sort of recessionary environment in response to the oil shock and yet see a massive increase in inequality? Or do you think that both could occur? Do you think that this could actually be a shock that changes the trajectory in a more meaningful way?
Unfortunately, I think the risk is that it changes it in a much more meaningful way. Going into this crisis, we were looking at sort of the fog of war and what kinds of sort of decision rules and scenarios out there. And unfortunately, our resilience through this as an economy is a double-edged sword, because it sort of suggests that the Fed can't afford not to raise rates at the same time that we're hitting demand with higher energy prices. And the two colliding means that we likely will need to see a slowdown that actually bleeds into unemployment to derail the inflationary pressures we see. In our best case scenarios right now, we're looking at an almost stall out of growth in the second half of the year that is not technically a recession, but not enough to hold the unemployment rate down after it falls further in the first half of this year. That is not a great scenario to have, and that's without the additional supply chain bottlenecks that you were talking about earlier, which I think are very important, because again, they add insult to injury in an already bad inflation scenario, and they continue to contribute to shortages out there.
Diane, what would holding rates where they are do? What would actually a more dovish approach from the Fed actually accomplish in this market and frankly in this economy?
My concern is that holding rates at their constant level right now, given the kind of momentum we've already seen, is that we would see a more entrenched inflation. We've already seen expectations on inflation have risen. They will rise more. And that means expectations for people pushing it onto employers. I've talked to many employers who are now getting complaints by their workers that did not get as big a raises as the entry-level workers got, and they're not keeping up with inflation.
Yeah.
That's how it's a different way of getting to the 1970s, but I think it's an important thing to be thinking about, is that you risk a much more entrenched, longer-lived stagflationary environment, and the Fed can't afford that either.
That is the American observation of the day. Diane Swank, thank you so much, with Grant Thornton there on the different deciles of income earners in America and what they see with this new, well, dare I say, Lisa, 8% inflation? I think, unfortunately, I'm right on that.
Well, and even if it's not perhaps in the CPI reading that we get on Thursday, it seems like it is headed that way and possibly beyond. Honestly, what she was talking about, really important, basically damned if you do and damned if you don't from the Federal Reserve. People say the awkwardness of hiking into a slowdown, but at the same time, you hold things where they are, you risk a more entrenched stagflationary environment that they really don't want to see and they have little influence over.
Yeah, we just went through 130 on Brent crude, 129.84 right now on Brent crude. I'm watching the global price, which is higher than the New York crude price, and IMEX is 125.38. But nevertheless, there they are, hearkening towards $5 a gallon. And of course, we've already seen that in certain geographies in the country. Lisa, your observation on an odd morning. Mine is simple. We've had radio silence from Russia. We have not heard much.
Yeah, and yesterday we heard that they basically were having a veiled threat that they would cut off gas supplies from the Nord Stream 1 as a possible retaliation. What really strikes me is the increase that you're seeing in both Brent and WTI, more than 5% on both, even though a lot of people said this was priced in. A lot of people said this basically was assumed. So then as we see more steps like this, how much more has to be priced in? And that, I think, is really a point of big disagreement right now.
Some of the Haven statistics we see, some are good, some are not. Euro Swissy shows weaker Swissy. That would be constructive. Dollar ruble moments ago rounded up to a 141. That is a weaker ruble all in all. The real yield, a negative 1.05%. Please stay with us. The president speaks at 10:45.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
The United States of America ready to impose sanctions on Russian energy. Brent crude at 130. Equity futures dead flat. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg The Open with Jonathan Farrow.
Live from New York City, we begin with the big issue, a humanitarian crisis. Russia and Ukraine saying they will make a fourth attempt at establishing a corridor for civilians fleeing areas of heavy fighting. Negotiations coming amid escalating hostilities. The U.S. ready to step up sanctions once again.
There is, I think, a significant not only opportunity but imperative in this moment to finally move off of, for many countries in Europe, a dependence on Russian energy because Russia uses it as a weapon.
The Europeans say no. Bloomberg reporting the U.S. will go it alone, writing, quote, the Biden administration is poised to impose a ban on U.S. imports of Russian energy as soon as today without the participation of European allies. Team coverage starts right now. Down in D.C. with Bloomberg's Anne-Marie and from Brussels, Maria Tadeo. Anne-Marie, you broke the story. The president will speak at 10:45 Eastern. What are we looking for?
Yeah, President setting to speak at 10:45 basically confirms, Jonathan, what us at Bloomberg first reported is that the U.S. plans to ban imports of Russian oil, LNG, liquefied natural gas, and coal. Now, LNG and coal are not big players at all in the United States. I don't remember any imports in modern times, but oil is a big player. 3% when you look at just hardcore crude, 8% when it comes to petroleum products. So still waiting on details on how exactly this is going to work. But Jonathan, really, this was just a matter of time for the administration to solidify what had already been happening in days in the market. There's been self-sanctioning with individual players in the market that just does not want to touch Russian assets, legal issues, or moral obligations. We should note, Jonathan, while Europe is not taking that leap today, there have been consultations with Europe, and they are doing it, I would say, almost with the blessing of their European allies. I spoke to a senior EU official today, and they just said Europe's not there yet. They are just too reliant, and this is how they heat their homes.
Maria, weigh in on that. Where are the Europeans on this conversation?
Look, I think, first of all, it's very hard to say the Europeans because, as you know, Jonathan, from your time in London, this is a market that's very fragmented. Every country has their own energy policy. Some are very ahead in renewables. Others are still very much dependent on gas and oil. And then you have the French that are tripling down on nuclear. But I did have a reaction from a European official in Brussels who tells me, well, in reality, what the United States is doing is not going to change much in real terms, but it does put Germany in a very uncomfortable position. Remember yesterday, the German Chancellor Olaf Scholz put down in writing, so there's no loss in translation here, that Germany simply cannot switch off from one day to another. And I should note, this official also telling me this is coming before European leaders hold a 2-day summit that will start in Paris on Thursday. So the timing is key here too.
So AMH, this raises a big question for the administration. Where do they look to for crude products? Saudi Arabia, Venezuela, Iran? What do they do now?
Well, there's a few options, and you named a few of them. One was over the weekend. They went to Venezuela. A number of U.S. officials, potentially they lift those Venezuelan cargoes that are under embargo. We should note Venezuela has the most proven reserves in the world. There's talks of potentially an Iranian nuclear deal. There's been a lot of optimism coming from Tehran on that front. Jonathan, there's also potential of calling the Saudis, putting a little bit more pressure on Saudi Arabia. I would imagine for the kingdom to want to help really put their thumb on this market and make moves in terms of more supply, they would want to know if an Iranian deal is closer or not. Is this really going to happen or not before they start to really impact the market? So there's a few players who could potentially immediately have an impact. There's also the United States shale industry. There are 9,000 leases, permits that are unused. Now, all of them aren't
aren't proven to have oil in them, but there are actual leases that could start drilling, but that would not be an immediate effect. And we should note that I'm told the administration has been talking with producers in the shale patch, so there has been conversations.
Those conversations have finally started, have they? Brent crude at 129, WTI at 124. Maria, before you run, I know you've got to catch another flight. Let's just finish on this. There was a story from us here at Bloomberg today on the Europeans making a push for another joint debt effort to fund defense, to fund energy. Is that to fund the energy transition or the higher prices that we're staring at on the screen?
That's a very good question, because Jonathan, in fact, I'm on my way to Paris because Emmanuel Macron is going to speak with Blinken, and then all of the European leaders will be there on Thursday. And I did get reaction again on that scoop that Anne-Marie broke on live TV on Bloomberg, and this official from Brussels tells me it doesn't have an impact in real terms in the operations that the U.S. has with Russia, but it will have a big impact on the price that we pay. And this is a real conversation happening in Europe. We've seen it from pretty much every major country prepping voters and society. This is going to hurt. This is a war that's going to go on for long. And this is now a big question mark in terms of we want to cut reduction from Russian dependency, but we're still continuing to pay. And the money that we pay today goes straight into Putin's hands. So I expect this will be a very tense European summit on Thursday going into Friday too, by the way.
Rita, thank you. Over in Brussels, AMH and DC, to you both, thank you. There was a poll outlet yesterday from Quinnipiac, which read as follows. I'll bring you the quote. Might surprise some of you. At nearly the end of week 2 of Russia's invasion of Ukraine, as the US and its allies consider ratcheting up sanctions against Russia, we're set to see that today. Americans say 71 to 22% that they would support a ban on Russian oil, even if it meant higher gas prices. 71 to 22. One poll I know, but does that capture the mood of this country? The mood of this country, seemingly, going by that poll, one poll, backs up the move of this administration we could see later today. Big oil was already there in many ways. We heard from Shell this morning, a bizarre statement from them, announcing their intent to withdraw from Russian oil and gas. The bizarre part of it is they apologized for the move they made last week. They bought Russian crude at a steep discount. We're told there's an energy carve-out. They used it and then still had to apologize. And Ben Van Beurden, the CEO, said this: "We are acutely aware that our decision last week to purchase a cargo of Russian crude to be refined into products like petrol and diesel was not the right one, and we are sorry." Now just think about that. There is an energy carve-out. They bought the crude and now they're apologizing. This is the self-sanctioning we've been talking about for the last 2 weeks. The administration may be putting their stamp on it a little bit later, but for the likes of Shell, for the likes of others too, they are not touching Russian crude from here. Let's have the conversation with the team. Manulife's Francis Donald, Bank of America Savita Subramaniam, and Judy Beale of Kane Anderson Rudnick. We've been talking about this, Francis, already. Are we on a one-way ticket towards demand destruction with crude this morning, Brent at 129, WTI at 124?
Well, there's no question that there will be less demand. It may not necessarily be for energy. However, that takes a longer lag. In the meantime, we know that there's not a lot of what economists call elasticity when it comes to energy. You still got to drive to work, for example. Same issue with food. So we should expect other areas of the economy in the next few months to weaken. That's going to be a problem for central bankers who are going to be looking at a situation knowing they can hike rates as much as they want. It'll have limited impact on oil prices. It'll dampen the part of the economy that's already likely to weaken. So yes, every economist is going to be revising down growth and up inflation just mechanically. That's what's going to happen next.
I'm surprised I haven't seen much of that already. Savita, you're perfectly positioned to help me answer this question. If the US consumer is set to pay more for gas, do they spend less elsewhere on discretionary items, or do they beef up the credit card bill? Which one is it?
Well, the answer is it depends on the type of consumer, but what we've seen is that the lower income cohort definitely spends less. And we've seen that it really impacts more of the lower price point retailers rather than, luxury is fairly immune to these types of oil shocks. I think to Francis's point, though, she's absolutely right. I mean, we just cut our GDP and increased our inflation target. So, I think that this is exactly what we're expecting to see is we're underweight both consumer sectors, consumer discretionary as well as consumer staples, because both of those sectors are generally hurt by oil shocks. And I think what's interesting is that we didn't just have an oil shock, last week. We had one last year where gas prices and oil prices effectively doubled already. So consumers that are running out of stimulus, that are starting to feel the pinch of higher gas and oil, the lag even from last year is starting to weigh on them. So I think that that's what we need to keep an eye on is lower price point retailers, discount stores. Those are where you generally see the sales suffer.
Judy, do you agree?
I think it depends on the consumer, but for sure, you're going to expect that the bigger ticket items are probably going to take a hit. You could see some consumers trading down into the discount retailers. You see this with companies like Ollie's and even sometimes Dollar Tree. So I think it's kind of a mixed bag for the retail sector. But overall, I think the consumer is going to be hurt. There just has to be a place where it comes from.
Brutal. Crude higher by, where are we now? Up 5%, up 4.5% on Brent to 128. On WTI up 4% to 124. Francis, Savita and Julie sticking with us. Let's get you some movers ahead of the opening bell. Tons to look at, 20 minutes out. Here's Abby.
There is certainly a lot to look at this morning, and with the futures basically mixed and unchanged, let's take a look at some of the commodity movers sticking with that theme, because of course the energy complex is mainly doing well with oil at its 2008 highs. We have ExxonMobil heading to an 8th straight up day, the longest winning streak in more than a year, and this of course ahead of President Biden's expected announcement on a U.S. ban of Russian oil imports. But the strength extends, I should say, to gold, because of course with all the chaos in commodities, with that crazy nickel trading, we have some of the gold miners higher, and at this point you have Anglo Gold already up 30% year to date. It's set to add another 2.5% to those gains on the morning, John.
Abby, thank you. Coming up, the United States pushing back on Russia's invasion of Ukraine.
Peaceful coexistence has two words. The first is peaceful. And Russia is doing everything in its power to make a mockery of that word through its aggression on Ukraine.
We will hear from the president in a few hours' time. This is Bloomberg.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
invades Ukraine.
We have proven our strength.
The nature of this war changed yesterday.
Turn to Bloomberg for up-to-the-minute reporting from around the world.
Ground troops are closing in on the Ukrainian capital.
Swiss abandon neutrality.
And analysis of what it all means to you.
Energy is on the table.
We could see oil prices moving closer to 120.
There is a lot of interest to offload Russian assets.
Look to see more companies announce their exits from Russia.
Keep it tuned to Bloomberg Television and Radio.
If Russia wants to engage in peaceful coexistence, which of course, in principle, we welcome, it needs to start by actually making good on the word peaceful and ending the war, the aggression that it is committing in Ukraine.
Russia's invasion of Ukraine sharpening fears of commodity shortages. The LME halting trading in nickel. This coming after the metal rose by as much as 250% over just 2 days, through 100,000 at one point. Javier Blas of Bloomberg Opinion joins us now for more. Javier, I'll repeat what I said to you earlier. You said this a few times. Something's going to break. And Javier, it broke.
Well, the London Metal Exchange nickel market certainly broke. Trading is suspended. I don't think that we are going to have trading tomorrow and perhaps for the next couple of days. There is a huge mess in the nickel market at the moment, and market participants, the banks, the brokers, the traders are going to need a bit of time to sort out every position. We're going to need also a plan what to do with the short position that triggered all the chaos, a Chinese company, how that's going to be settled. Probably it's going to have to be private conversations outside the exchange. And then we're going to need a bit of a plan on kind of the medium term of how to avoid the repetition of this. And we're going to need the British regulator, the FCA, deeply involved, that so far that they appear to have not really been that involved into the situation, so the market can regain confidence. But that is not something that it can be resolved in the next 8 hours. So I'm expecting that trading will not restart tomorrow.
You think it will be shut again tomorrow, Javier?
Yeah, I think that we're going to be shut down tomorrow and potentially Wednesday. I'm talking to a number of traders, brokers on the market, that they think that they need a bit of time to really go through every position and try to start sorting out everything. I think that if the exchange tries to restart trading tomorrow, we're going to be in the same situation in a few hours' time.
Javier, was this just one man with a range of brokers, or is this a broader story where we're going to see a lot of people get hit and hit hard?
I think that we're going to, at the moment, we are seeing one man and one big Chinese company, but certainly some of the banks supporting the position and some of the brokers are going to be hard. The losses that we are hearing are calculated into a handful of $1 billion. So this is not going to be cheap. It's going to be a big hit for the London metal market.
It's going to be expensive, that's for sure. Javier Blas, thank you, sir. As always, buddy, we appreciate it. The energy story stateside, energy on the S&P 500, we are higher by 37%, the highest in more than 7 years. I want to turn back to the desk. Francis Donald, Julie Beale, Savita Subramaniam. Savita, I want to come to you on just some of the energy names, if I can, and start here. We've had a move of 30, 40%, up 37% year to date. Do you start to get to a point where you look ahead further down the line into next year and say, this outlook for this cycle doesn't look good right now. I'm not sure I want to own those names anymore.
You know, we've had a big move in energy, but you need to think about the big downward move that we had before last year. And I think that that's what's important to keep in mind, is that if you look at valuations, they're still relatively attractive. These companies are generating free cash. They've got capital discipline. I think it's a different type of sector. What I would watch in order to know when to get out of the sector is valuation and positioning, and both are still generally constructive. In fact, it's interesting. Fund managers have not necessarily bought into the energy sector. They're still quite underweight, and I think they've been buying, you know, other areas like industrials. And we talked about this on your show. Folks just don't want to own energy stocks because of all the ESG kind of stigma around fossil fuels. So there is this issue right now where energy is a big enough sector where if you're not in it and it's doing well, it will actually hurt performance. And I think that's one of the reasons that we could continue to see some buying or some capitulation into the energy sector, you know, going forward. Positioning is still very light. Free cash flow is still very healthy. And then again, you know, our big theme is inflation protected yield. And when you look at energy companies, their free cash flow yield is, 9% relative to tips that are yielding real, where the yield is negative on a real basis. So I think it still has a lot of attractive opportunities despite its strong performance.
Julie, I'll come to you on the same question. Are they names you still want to hold on to?
I think for us, it's very uncomfortable owning stocks that with, Putin's changing his mind can undo a lot of the gains. So for us, that's a sector that's not super appealing. It's hard to have differentiation. That said, I would like to put in a plug for Putin, great job uniting the whole country, the whole world, as it turns out. I really appreciate that on his part. But energy sector, for generally speaking, not for us. But I think there are sectors that serve energy that have better business models. They're more differentiated because what we're trying to do is own businesses over the next 5, 6, 7 years.
Francis, that's the difficulty, and I think Julie touched on it. The headline risk, de-escalation risk. That's one risk that we don't talk about enough. We know the escalation risk. We know what that might look like. Are we at the point now where de-escalation risk, Francis, might be the bigger risk for a market that's seen a huge dislocation in the last couple of weeks?
Well, this market is so focused on the Russia-Ukraine conflict, which it should be because it's a sizable shock. But Savina's made a comment a couple times I think is critical. Think about contextualizing this. Where were we a month ago? We were in a flattening yield curve. There were signs that the cycle was extended. Consumer confidence was declining. Real wages were declining. I think if we focus too much on just Russia-Ukraine, clearly a huge risk. We're going to miss that this market was already flashing yellow on red on a lot of the major economic signals. So even if we see de-escalation of Russia-Ukraine, which as an economist, I can't model, I'm still going to be looking at weak growth for Q1 and Q2. That Atlanta Fed now GDP was tracking around 0% growth for Q1 before Russia-Ukraine came in. So yes, de-escalation, yes, we should be looking at upside risks as well, but let's not forget the long list of downside risks that we were dealing with before we got this headline shock.
And then the rate hikes in the mix. Where I think you might disagree with the team at Bank of America is this one. Savita, are you still at 7 hikes for this year? Is Ethan Harris still looking for 7, one at every meeting for 22?
We're still looking for 7 rate hikes, and I think obviously data dependent, and the Fed has been very vocal about watching trends to sort of pivot on a real time basis. I think though again, I think what's important to remember is that 7 rate hikes doesn't even get us to a neutral rate. I mean, we're still at a super low, relatively accommodative level for short rates. So I think that's important. Is the delta might sound really extreme. 7 hikes sounds like a lot, but think about where we are right now. We're at 0 on short rates. We're below 2% on the long end. Meanwhile, we've got inflation running rampant. We've got crude oil at, above 100. I mean, it's kind of a disconnect right now. And I think that what they need to do and what they've said they're going to do is essentially resolve a bit of that by, increasing rates a bit to 175, not the end of the world, and and staying the course this year. So we are sticking with that 7 rate hikes.
Francis, can we get to 175 without breaking something?
I don't think we can get there this year. Remember, typically when the Fed hikes, they're doing it into rising PMI, strong growth, an economy that's reaccelerating. In this case, they're actually going to be tightening into a decelerating economy. So I also have 7 hikes, but I have them over the course of 2 years because in that sense, they'll have to proceed more slowly in my view. But let's not forget QT, because I do expect there to be sizable QT along with these 3 rate hikes in year 1. That is another form of tightening. So I don't think that 3 versus 7 actually sounds as extreme as it might over the headline. We're still looking at a central bank, indeed central banks globally, that need to normalize even amongst this volatility. The question is, how fast can they go? I think they're going to run into troubles around the middle of this year.
Awesome lineup this morning. Francis Donald, Julie Beale, Savita Subramaniam sticking with us through the opening bell. Coming up, the morning calls. And later, crude rallying to 129 on Brent or 124 on WTI as the Biden administration prepares to impose a ban on U.S. imports of Russian energy. That's all coming up from New York. This is Bloomberg.
prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Happening this morning, we expect to hear from the President of the United States. Bloomberg reporting that we could have a ban on Russian energy into the United States. Futures up 0.2%. Here's the move on Brent, approaching 130. Right now on Brent, 128.66. That's the price action. Here are your morning calls. First up, Bank of America downgrading ConocoPhillips to neutral, seeing limited upside amid surging volatility in commodity prices. Baird upgrading Bank of America to neutral. The analyst now seeing a more favorable risk reward following recent declines. And finally, Consumer Edge downgrading ConAgra to equal weight, expecting food costs to remain elevated throughout the war in Ukraine. That's a real tragedy worldwide. Coming up, Brent jumping to 130, with the Biden administration preparing to impose a ban on U.S. imports of Russian energy. That conversation is just around the corner, with equity futures this morning positive by a little more than 0.1%. And in the bond market going into CPI on Thursday, yields higher by 8 basis points, 10s at 185, 2s at 159. This is Bloomberg.
the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. Earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
"23 seconds away from the opening bell. Good morning to you all. This morning, we're positive by just about 0.1% on the S&P, on the Russell up by 0.2, on the Nasdaq down by 0.3% or so. The story's not here. It's in the commodity market. The opening bell in New York City rings. Switch up the board and get to the commodity market. Crude looks like this. WTI 125, up by 5%. The president speaking, set to speak, scheduled to speak at 10:45 Eastern. I laugh because you never know. That's meant to be 1 hour and 15 minutes away. Typically, he turns up a little bit late. We've got a preview from the team down in D.C. The president expected to announce a ban on Russian crude imports. Look out for that. Euro positive, euro dollar 109. They could make that move without European allies. The euro stronger off the back of a report from us here at Bloomberg that we could have a joint debt effort again to fund defense and energy on the continent. I'm sure Guy Johnson's going to be talking about that in about 30 minutes. Yields are higher by 8 basis points to 185.77 on 10s going into CPI this Thursday. That's the cross-asset price action with your movers at the open. Here's Abby.
John, well, sticking with the oil story, the natural resources boom, this commodity move that we're seeing, just really incredible right across the board. Oil in particular, very strong. The energy complex is up and away, especially some of the refiners, including Valero and HollyFrontier. But it's interesting, John, we also have a bid for alternative energy. The likes of Sunoco and Plug Power also higher on this morning. Interesting, taking it to another leg, you would think that this would impact travel in a negative way. The rising cost of jet fuel, we've certainly seen that. But today we actually have strength for travel. So we have this strange tension between this energy crisis and the desire to reopen today. The desire to reopen relative to travel is working. But energy, as you know, the top sector in the morning.
Big time, up 2% around the opening bell, about 35 seconds in. Your equity market is flat. Move to the downside of consumer discretionary. You might expect that. We're down by 0.6% for that industry group. Looking at crude close to 130. Let's get more with Kaylee Lyons. Hey, Kaylee.
Hey, John. Well, with commodity prices this elevated, it feeds into fears of inflation, which actually is now morphing into fears of stagflation. And you see that reflected a bunch across a bunch of, if I can get my words out, different assets. One of them being, of course, the yield curve is what we look at, which has been consistently flattening over the last year. That gap between 2- and 10-year yields now sitting around 26 basis points, which actually is even a little steeper than where we were yesterday, but still is about the flattest going all the way back to March of 2020, which of course is the height of the pandemic recession. And that basically indicates that concern, that the idea that policy is going to get too tight and choke off growth down the line. And of course, you have the yield curve, you have higher commodity prices, you have stocks that have been selling off, all of that fueling the fire around concerns about recession. And just to linger on stocks for a moment, I wanted to point to this from Citi. Global earnings revisions are actually in negative territory for the first time since September of 2020. So more net downgrades than net upgrades to forecast. The strategist there saying that is a game changer as it removes fundamental support just when liquidity is also about to be sucked out by central banks. So in that kind of environment, where do you put your money, John? Usually in periods of stagnation, it's defensive stocks that tend to outperform, and that is definitely what we have seen over the last 2 weeks. When you remove energy, because that is far and away the outperformer for obvious reasons, thanks to the oil price, the other top performing sectors in the S&P 500, utilities, real estate, estate, healthcare, all of which are defensive sectors, John.
Kelly Lyons, thank you. The team over at Citi using that word, stagflation. The S word reads as follows. Concerns are rising as the fallout from the conflict in Ukraine threatens to weaken economic growth while lifting inflation. The recent sharp drop in real yields means growth strategies should do better. We have a preference for growth over value with some mild cyclical tilt with value. Let's pick up on that word stagflation and get to the team. Francis Donald, Julie Bill, Savita Subramaniam. Julie, do you subscribe to that? Is that a framework to explore stagflation?
Absolutely. I think the problem that we have right now is higher oil prices mean that there is likely going to be more aggressive Fed action. But I think the true question is, does this lead to demand destruction? And we can go back historically and see all of the periods where oil prices rose dramatically, and you see meaningful demand destruction. And since the U.S. economy is generally a consumer economy, it has meaningful ripple effects throughout. For us, we would pay attention to smaller mid-cap software names that have high levels of recurring revenue, durable earnings growth. I think those are the places to hide out, and I would call them your comfort stocks.
Can you talk to me about banks as well? Julie, we're talking about higher rates, and yet banks have backed away. We're talking about higher energy prices, yet at the same time, we're also considering what may or may not happen with energy equities as we start to explore demand destruction a little bit more. Julie, what do you think all this means for the banks at the moment, which are very much on the back foot year to date?
I think it's been interesting. We had all assumed that the higher interest rates would translate into higher prices for the banks. And I think if you look at the mega caps, that hasn't really panned out, partly because I don't think their exposure to that is so strong. Your smaller banks, they have more of an impact from a rising rate environment, but they have converse effects as well in terms of, is there going to be more lending if interest rates rocket higher? So much of the smaller banks have been benefiting from a really strong housing market, and that may disappear over time.
Down 12% year to date, coming into today's session. I think the lowest in more than 12 months. Savita, where do you stand on the financials, on the banks more specifically?
Look, we're overweight financials, and I think that the sector has, as Julie rightly pointed out, this sector, especially the large cap banks, are not necessarily as impacted by the yield curve, by rates. I think this is a source where you still have relative value. You have a sector that has basically de-risked after the crisis. The leverage ratios are at close to all-time lows. Even during the global pandemic, you saw earnings of the banks remain relatively, stable versus other cyclical sectors. So I think that this is kind of fits in with our quality income theme. I personally think we're going back to a time where we're going to buy bank stocks for the quality and the dividend yield rather than this levered bet on housing, which was the story in 2008. I mean, I think the sector has transformed itself. I think the other kind of theme for banks and energy is that they are still, despite their strong performance over the last 12 to 18 months, these are still very underweighted sectors by the buy side. So I think that there is less crowding risk within banks and energy than there is within some of the growthier areas of the market like tech, TMT, et cetera. So I would stick with financials. I don't think that they're necessarily hurt by a flattening yield curve. We've done the math, we've done the work, and we haven't necessarily seen this strong relationship between yield curve and financials companies. So I think it's a sector that's unloved, still relatively inexpensive, and much higher quality than it has been, in prior.
Savita, when you say you've done the work, do you mean you've done the work on what the yield curve means to profits, or you've done the work on what the yield curve means to investor attitudes towards the group of equities? Because what I often find is that the bank analysts on the single names will tell you what actually matters to the banks and profitability is not where the 10-year yield is at. But for a lot of people in the broader market, it shapes their attitude towards allocating money to the financials. So does it matter? Doesn't it matter? And what does it actually matter to?
That's a great point. And I think therein lies the opportunity. I mean, if the macro folks and the generalists are getting it wrong and the banks are actually moving and generating profits on different factors, I think all the more reason to really step in. And, I think that one of the issues that's been created by this sort of macro focus is we can trade ETFs and sectors really easily now. So, the financial sector has moved in lockstep with the yield curve, whether it should or shouldn't because of this investor sentiment. Again, I think this is a great time to pick stocks. And I think what we need to do now is the work of listening to the fundamental analysts and figuring out where the macro folks are getting it wrong. I'm a macro person, but I know that a lot of these relationships that we've tested that seem like they would work don't necessarily work.
Francis, your world, are the macro folks getting it wrong?
Some are. I think it's funny that we hear concerns about stagflation are starting to rise. It's too late to start getting concerned about stagflation now. We're already in stagflationary dynamics. Q1 GDP tracking at 0%, and CPI is going to hit an 8 handle this week. I mean, now is the moment where growth is going to be too low relative to comfort and inflation too high. But how do you translate that? And that's why we need people like Savita and Julie, because even we have looked at past cycles and said, well, yes, every recession is preceded by a huge jump in energy, but we're in a different environment where energy is less of the consumption basket. 2s, 10s are on the brink of inverted, but is there an adjustment that needs to be made for the term premium, or is the Fed's buying creating distortionary impacts? So I think macro folks generally can get it right, but that doesn't mean they know to necessarily translate that to the trade. And that's why, even as a macro person, it pains me, we always need good people to pick good stocks.
Francis, can you talk to me about the yield curve? Seemingly the only two people that talk to me about the yield curve at the moment is my friend in the bow tie and my friend Bramo waiting for the apocalypse. Now, I want to understand, Francis, why no one brings that up anymore. You've identified the same thing. Typically, when you get to about the 20s, it's all I'd see everywhere. Now people don't talk about it as much. Do you experience the same thing?
Well, absolutely. In 2019, 2018, it was all anyone would talk to me about. There might be a few reasonable reasons for this. One is that we're not seeing the same level of inversion across the entire curve. So, for example, the longer end is not inverting so much with the 3-month. So that gives us a little bit of a pause. Second, we understand there are distortions with the yield curve. But just take a step back and look at this. We've been flattening for over a year. This is a market that is saying the Fed is going to have to respond to stagflationary dynamics, which means they're not going to have any cover to pivot, which means that front end is going to have to rise, and we have not seen ourselves exit into escape velocity for the long end to come out. A lot of that, I think, is also fiscal being reflected. We didn't get game-changing fiscal, and we haven't seen game-changing productivity. So all the macro factors that would drive that long end higher have not materialized. That's very unlike what we thought would happen when COVID first hit, and we thought it'd be a game changer for long run growth.
The 2s, 10s closed out 2021 at 77 basis points. 2s, 10s right now at 27. Judy, Bill, you get the final word on this one. The final word, please.
Well, I think if you look overall at the economy, the risks are definitely towards the downside. And for us, as longer term investors, we're looking for the quality businesses, ideally businesses that have been through these types of cycles before. And so it's a great time to be a fundamental investor, to actually look at the earnings. So many of these stocks have been beaten down indiscriminately, and I think it's a real opportunity for those who are looking at quality.
Do we really have to wait for International Women's Day to do this panel every day? Can we just do that, Monday to Friday? If you find an hour for me every day around 9 Eastern, we'll continue to do so. Francis, thank you. Savita, to you as well, and Julie. What a lineup. Fantastic. Thank you very much. About 11 minutes into this session, equities pulled back 0.2% on the S&P 500. Crude approaching 130 on Brent. Coming up, Secretary Blinken setting the stage for sanctions on Russian crude.
With regard to a potential oil embargo, an embargo on the importation of Russian oil, this is something, as I mentioned, that we have been discussing within the administration.
That's next. This is Bloomberg.
Exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon, Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
It's almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping. But many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada. Tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
With regard to a potential oil embargo, an embargo on the importation of Russian oil, this is something, as I mentioned, that we have been discussing within the administration. The president discussed this as well yesterday when he had a call with the French president, British prime minister, and the German chancellor, and something we're very much actively looking at.
As we know, the Germans have said no. They said that yesterday. And what we've learned this morning here at Bloomberg is that the president is set to announce a ban on Russian energy. Europe won't be joining them. Julian Lee joins us now for more. Julian, I want to get you on a headline I've just seen from Germany that takes us to the other side of the story. We'll be focused almost exclusively on what a ban of Russian energy into the United States means for the oil market. And we can touch on that in a moment. But Germany just said this. Germany is prepared for Russian energy curbs. Julian, I don't think we've quite spent enough time considering what the reaction to the action we're about to see will actually look like from the Russians.
Yeah, I think this is going to be a big part of the picture. Everybody's been talking about how Europe and the US should impose sanctions on Russian oil exports, potentially on Russian gas supplies. But relatively little has been said about how President Putin may react to even initial sanctions on oil supplies. And obviously his biggest weapon in that sphere is gas exports to Europe. And I think you have to factor in the possibility that he would retaliate by closing down the pipelines that bring Russian gas into, particularly into Germany, but into many other European countries as well.
Julian, this gets messy and potentially messy very quickly. Can you work me through piece by piece just what we know so far, based on our reporting? Based on our reporting, we'll get this decision from the president. He speaks in about an hour from now. A decision to ban the import of Russian energy. Europeans don't go with them. Is that just moving the deck chairs a little bit? Does the US go somewhere else for crude and Europe ultimately stays with Russia, maybe takes a bit more of it, China comes in? Does it really change anything?
I think firstly, I think it sends a very important signal that those who can will clamp down on purchases of Russian oil, gas, and coal, which I think is what the Biden administration is talking about, all three sources. Now, obviously it's much easier for the US to do that than it is for European countries. We might see some other countries in Europe taking similar positions. I mean, it's quite possible that the United Kingdom might follow suit. We here are much less dependent on Russian supplies than some of our counterparts on the continent. And there is this possibility of chipping away. But as you suggested earlier, the retaliation to that might be a very rapid escalation from the Russian side. Now, that's not cost-free. Yes, Russia may be able to divert at least some of its oil exports elsewhere, but the only way that it would be able to do that is to put that oil on tankers, either in the Black Sea, if the tankers will go to Russian ports, or in the Baltic, and then ship them a very long way round to China or anyone else who will take them. That's going to add massively to the cost and the time it will take to deliver them. For gas, if he doesn't ship his gas to Europe, he's not going to be shipping it anywhere because the big gas fields that supply European markets aren't linked to pipelines that will take that gas anywhere else. So for him, yes, he can cut off those supplies, and he may calculate that will do more damage to European buyers than it will to Russia, but he can't divert those gas flows anywhere else quickly.
Just got a headline, Julian. The UK is to announce a ban on Russian oil imports as well. Clearly, for Europe, this is an important issue. For the EU, for the Germans, for the French. For the US, less so. Where does the UK fit in, Julian? Just their dependence on Russian energy.
I think it clearly fits between the two. We take relatively little energy from Russia. There's quite a big presence for Gazprom trading in the UK, but that's typically trading gas that it gets from elsewhere rather than molecules that actually come from Russia. For oil, it's a little different. There was a case of a tanker full of diesel fuel that unions said that they wouldn't unload earlier in the week or at the end of last week. We do take supplies of Russian fuel. We do take supplies of Russian crude oil. We are going to have to replace those from somewhere, and it could get quite tricky. The diesel market in Europe is already pretty tight. And so cutting off a significant source of supply in Russia is going to cause difficulties. But it's something that I think has to be done. The worst situation we could possibly put ourselves in is the one that we seem to be in at the moment, which is continually threatening that we might impose some sort of sanctions, which then forces prices up. But by not actually doing it, we're simply paying more for every barrel, every cubic meter of gas that we buy from Russia, and we're filling the coffers of the Kremlin.
Julian, that's the story of the moment. It's become almost a moral obligation to pull back. It's no longer about what it was just a couple of weeks ago, which was about hurting their economy without hurting our economy, they being Russia and us being the UK or the United States, for instance. Now it's about a moral obligation. That seems to be the perspective shift that we've seen from the US administration and others. Do we have a moral obligation to pull back from Russian energy? Julian, thank you. Just to run through those UK headlines. So this is it. The UK to announce a ban on Russian crude imports. The ban on Russian oil to be phased in over months. Won't happen immediately. The UK decision will not affect Russian gas imports. This according to an official in the UK. So I'll go through that again. The UK to announce a ban on Russian oil imports. It will be phased in over months, but it will not affect Russian gas imports. That's according to an official. That last piece of information, I think, is really, really important. What it will affect, what it won't affect. And if we get a US decision a little bit later today, listen carefully to the language. What is it? Energy, all of energy, including crude products, just crude, liquefied gas and coal. That's what we want to hear from the president for just a little bit later. The president of the United States speaking within the next 60 minutes or so. From New York, this is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
"25 minutes into the session, expecting to hear from the president at 10:45 Eastern Time. The US set to impose a ban on Russian energy after the UK makes the move to do something similar. Futures look like this going into the open all over the place, and now, about 25 minutes in, the S&P 500 cash story is down 0.2%. That's the equity market. Here's the trading diary. The president of the United States discussing actions to hold Russia accountable for its invasion of Ukraine at 10:45 Eastern. Secretary Blinken meeting with French President Emmanuel Macron at 12 p.m. The Treasury selling 48 billion in 3-year notes at 1 p.m. US CPI coming up on Thursday, looking for something close to 8% on inflation. Shortly thereafter, seconds later, you will hear from the president of the ECB in a news conference. 45 minutes before that, you'll get an ECB rate decision. Finally, to close out the week, UMich Consumer Sentiment Survey coming up on Friday. The focus this morning, very much on the energy market, with Brent at 131, approaching 132, with the President of the United States speaking a little bit later. From New York, this is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Businessweek about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands. And it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in Sari Sari stores every day, also on TV, radio, and newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number Fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with number fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million-peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the NBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113A, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi Number Fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's Number Fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as a coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic. They had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack on the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins, and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be a ploy by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker but pretending to be a foreign person.
Federal investigators have detained 1 man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Benegold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Benegold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Benegold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Benegold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why he may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Weinergold as an opportunity to leave that troubled home. Weinergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Weinergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Weinergold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Weinergold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in jail in Germany.
The threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's something worth investing in. It's our existence at stake, right?
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there like a lot of other natural hazards. These are very, very infrequent events, these collision events where an object actually impacts the Earth. The most important thing that we need to know about asteroids is when the next impact is going to happen and how bad it will be. What we know is that an object that's about, say, a kilometer across is capable of causing very, very wide devastation across the planet, really, truly global devastation.
The object that wiped out the dinosaurs was somewhere in the neighborhood of 5 to 10 kilometers across, so even bigger than that. At a kilometer, it's still going to be very bad and will have global effects. For objects that are capable of causing what I would call sort of regional damage, kind of a large major metropolitan area, a city and its surrounding environments, sort of around 100-ish meters. It depends on the details of the composition and so forth.
By the 1980s, NASA was cataloguing near-Earth objects. In 1994, stargazers watched as comet Shoemaker-Levy 9 hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets in our solar system. In 1998, Congress tasked NASA with finding 90% of asteroids and comets 1 kilometer wide or larger. Soon after, Hollywood blockbusters Armageddon and Deep Impact brought attention and fear to the masses.
The great news is that the vast majority, more than 90% of all the really large 1 kilometer near-Earth objects have been found. The challenge now is working down to these smaller sizes that are still quite capable of causing a lot of damage, but they're just harder to spot because they're fainter, they're smaller.
Can you give us a sense of how many are out there in our solar system?
We know that there are a lot of asteroids in our solar system. They number in the billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the inner part of our solar system live, and they stay there for many billions of years. There is another population, though, that kind of leaks inward and gets into the region somewhat close to the Earth, and we call these near-Earth objects. We think that there are millions and millions of near-Earth objects that are out there in the total population. As of today, we know of sort of around 20, 25,000, something like that. When we first spot an object, we really know very little about it. We just see something moving across the sky. So all you get is just sort of a handful of snapshots, just enough to be able to tell that this isn't an asteroid that we've already seen before. And then once we can calculate the distance to it, we can now start to make predictions about its true size. Is it large or is it small? So we have a lot of information that we have to get pretty quickly to really understand what's going on.
Finding asteroids is just one piece of the puzzle. Planetary scientists are extremely skilled in determining the orbits and speeds of asteroids based on relatively small amounts of data. NASA runs simulations of the trajectories asteroids could take, which is useful but time-consuming. A team of scientists in the Netherlands have found a way that could buy us more time.
Our method is very quick. So you can very quickly get an assessment of whether or not the object is dangerous or not. If you look at the classical way of determining the danger of an asteroid, it may take days of computing time on very big machines to determine this hazardousness.
The current problem is that there's just too many asteroids out there to spend a huge amount of computational power on all of them. So the neural network allows us to focus on what really could go and pose a hazard to Earth.
A neural network is a computing system that mimics the way the human brain operates to find underlying relationships in a set of data.
By training the network in this way, you train it in recognizing those objects that are most likely to hit the planet. And once it's trained, you can apply this network to all the unknown asteroids. And then you can make a selection and saying, hey, these are the ones which appear to be having orbits similar to the ones which we know are hitting the planet. That doesn't mean that they do, but it only means that they look very similar to the ones we know they do.
What else did you find? Should we be particularly concerned about anything?
One thing that we did find is that our neural network was able to go and identify a handful of asteroids which weren't considered potentially hazardous, that when we went and integrated them forward in time, they came quite close to Earth.
We find a handful which were not detected before or not considered being dangerous before, and we think they are potentially dangerous.
It's very hard to simulate kind of going forward in time an asteroid that's going to hit Earth because, well, the Earth is really small. And space is really big, and then you have to have very exact parameters to shoot an asteroid that goes and hits exactly Earth. And then Simon had the ingenious idea of not even trying to do that and just launching the asteroids from Earth's surface and integrating backwards in time.
It's very hard to make it hit. So you need a lot of calculations which all end up in nothing. And the idea was then like, well, let's not do that. This is basically what NASA is doing. NASA is taking an asteroid, making multiple copies of them, shooting them all forwards in time, calculating their orbits, and then see what fraction sort of gets close to Earth. Not even hitting Earth, but getting close to Earth. And that they call it a potential impactor. So you calculate the solar system forwards in time for, let's say, 1,000 years. And then you launch asteroids from the surface as if they, if you go forwards in time, would fall on the surface. You calculate them backwards to today, and then you get your orbital parameters of today's asteroids, which you know will land on the planet. And those you can use as known impactors and compare with all the other asteroids in the solar system.
Can simulations and AI, can those things fill in the gaps where perhaps telescopes and other imaging tools can't?
Absolutely. Since the observations get more complex, the physics gets more complex. And if the physics get more complex, the mathematics becomes more complex. And at some point, you can't solve your problems analytically anymore. And then this is where the computer comes in. Now we have this trained neural network. We have a way of calculating in a fraction of a second whether or not an asteroid is potentially dangerous or not, and therefore deserves more attention or more time to spend on for really finding out if it is dangerous.
When it comes to hunting asteroids, time is critical.
What we can do about a potentially hazardous object depends a great deal on what we know about it and how much time we have before the encounter. We'd really like to find them when they're decades away, because the more time you have, the more options you have, and the less energy it takes to move an object aside.
It also means we might not have to resort to launching a nuclear warhead at an asteroid. Until recently, pretty much our only choice.
That's an option of last resort, in my opinion.